Welcome everybody to this live stream. We're going to be covering the Tesla results as they come in. We are starting just about 10 minutes before the markets close, just anticipating what's going to happen. Hopefully everything's working and hopefully the stream is going to work. I've been on vacation for a week, so a little bit rusty with YouTube. Please tell me if there's any issues, but there's a bunch of different stuff that we're going to be talking about, and this earnings is going to be slightly different to most that we have seen recently in that there is far less certainty around exactly what is expected. The Wall Street analysts seem to be unsure. People on Twitter seem to be unsure. There's a bunch of people who seem to have very, very high certainty around their projections, but I think there's potentially a little bit too much on the optimism front from my perspective around what the results are going to be. Obviously, we will know, and normally these come out in just about 10 minutes, just about like 3-4 minutes after the markets close. So we're not going to have to wait too long. So what we're going to be doing in terms of format is we'll talk very quickly about the questions that I have, some of the things I want to see, like what I'm interested in, talk through the questions that are going to be coming up. And then we're going to be covering the results as they come out. We're going to quickly go and look at the headline numbers. Then we're going to go read through the whole report, see what they've got to say, talk about, do some analysis of the data, try to go and look at different parts of the reports and try to see what's a bit different. This one should be very different to what we've seen before for many, many different reasons. We're going to come in just a second. And then there will be an earnings call later this evening, and the earnings call is going to be 1 second. The earnings call is going to be at 5:30 Eastern time. So it's going to be about an hour and a half after the results come out ish. So we've got plenty of time to. I've got loads and loads of drink here. I apologize. It is extremely hot where I am, and I live in the UK. In the UK, we are such peasants. We don't really have hot weather ever, except for like the last 3 days, that we don't have air conditioning or anything like that. So it's extremely hot in this cow shed that is actually my office. Long story. Okay, so I'm going to be drinking a lot of water. There we go. And I've got that is unfortunately, I'm just mindful. I've got a little thing to dab my forehead. It is obviously all to do with excitement, and maybe holding a few too many Tesla shares as well. That potentially is another thing, but. Before we dive into all the details, first, let's very quickly go and talk through what we already know. And I'm going to go and try to stick the screen on. 1 second, share screen. And I want to share a Chrome tab. Here we go. This is the data that came out relatively recently at the beginning of the month. Always comes out on the 2nd, give or take. And we saw that Tesla delivered probably above or in line what most people were expecting. And most people kind of saying, hey, if it's above 250,000, this is going to be good. If it's a bit below, people probably would be okay with it. They delivered 310,000 the quarter before, 308,000 the quarter before that. So it's a bit of a drop because the Shanghai factory was closed at the beginning of April. It started closing at the end of March. It was closed for most of April. And then that went into May. And in May, they were working on a reduced one shift pattern where people were living pretty much in the factory making those cars. So it was, nobody really knew exactly what they're going to be able to do with that. Although we did get China production numbers for April and May before we got this data, so we kind of roughly knew, I guess, what ballpark is going to be in. But anyway, these are the numbers that we had going into this earnings. And the interesting thing here is in terms of the numbers that we're going to be seeing in maybe about 10 minutes time, is that production is about 18% down. The distribution between Model S, Model X, and the 3Y is roughly similar. The prices have been going up in Q1 this year. I think there were 2 major increases in pricing. So the cars that are being delivered during the course of Q2, which is what we're looking at here, are going to be slightly more expensive. So although we're going to be seeing a reduction in revenue on the automotive front, it's probably not going to be the full 18% versus Q1, just simply because that they're able to charge a little bit more. However, it will be interesting to kind of understand what the distribution differences are. And this is, I think, something that a lot of people are not appreciating in this, in that they normally deliver the Shanghai cars over to Europe in the first month and a half or 2 months of production. So in every quarter, the cars produced in the first 2 months of the quarter get put on ships, get sent over to Europe, to other parts of the world, and then delivered there. This time, they didn't have that luxury because the first month and a half, they couldn't actually go and produce cars and send them off. So the potential downside here in terms of the commercials is going to be that the total revenues are going to be affected because a lot of the cars that were manufactured in China were then sold in China, and that potentially means that the average price is going to be a little bit lower. So there's going to be a little bit of that. What are people saying? 49, 50 degrees here today. Yeah. There's a lot of people who live in very hot places. We live in a place that never gets hot, but it is. But we've had 40 degrees here yesterday. It's not quite as hot today, but still hot enough. So there we go. All right. So in terms of some of the other things that I'm particularly interested in, we've got the Bitcoin impairment charge that's going to be posted for the first time, and this is an accounting kind of thing. So because of the way that assets like Bitcoin get treated in terms of GAAP accounting principles, you don't get to benefit when the asset goes up in price. Because like accounting standards don't until you dispose. So if you would like to sell, then you'd get a one-off benefit. But while you're holding, you don't get a benefit if the price of Bitcoin goes up. However, if the price then goes below the point at which you bought it, you then have to book that as an impairment charge. And I'm not going to go into the depths of that, but you kind of have to book it pretty much at the lowest point during the quarter at which you hit. So depending on how you counted, because different exchanges, do you go by the day, by the hour, by the minute, by the second, or whatever? And people are sort of saying it's probably going to be somewhere in the $460, $480 million impairment range. So that means that they're going to have to book that as a technical loss, and that's going to affect their profitability. The really interesting thing is going to be, they also started getting rid of staff during this quarter. So they were cutting 10% of non-manufacturing headcount. There's a lot of conflicting stuff all over Twitter, all over the news, saying that they're firing staff with 1 week severance, with no severance, just getting rid for performance reasons, stuff like that. I'm not entirely sure how true or accurate this is. It's very, very difficult to get any specifics, but I'm guessing there's going to be some severance costs during this quarter as well. Potentially, maybe people are throwing very, very different numbers. I'm not seeing anything concrete in that yet. We're 2 minutes away from market close, and the numbers are going to come out after market close. So nothing yet. So it's going to be severance. And in Q1, we had $3.3 billion of net income. So the question is, if we start with $3.3 billion net income, we subtract 460-ish billion for the Bitcoin impairment. We then subtract, so let's say it's 18% of revenue, which is the difference in the numbers that were being produced. If we subtract the 18%, that's another about $3 billion. The question then becomes, that brings you to about break even. The question then becomes, what was the cost in ramping up Austin and Berlin? So hiring all the employees, all the other costs associated with starting the factories for the first time, kitting them out, etc. Stuff that isn't going to be CapEx based, but going to be expenditure based. What was the cost of that? Number one. Number two, what was the running cost of the shutdown that you weren't able to save during the Shanghai closure? So for example, when the factory was shut down, how much of the regular ongoing running cost of the factory still had to be incurred? I don't know the Chinese labor laws or the specific contracts that the employees there are on, but I'm not sure. A lot of people can say, well, if you don't produce cars, you don't have costs. And I'm not sure that's entirely going to be accurate there either. And then there's going to be another question as to how much of the gross cost benefit is going to be seen from not producing cars. Because on the one hand, sure, you're not producing cars, so you're not offsetting those costs. But if the factory is still taking, say, the factory is not open, is not manufacturing, but is still taking deliveries of raw materials that you've placed orders for before that were already on the way, things like that. I don't know exactly what the timing of those things is or exactly how it works. So potentially, the big question is going to be what the difference between the savings that they had from not producing as many cars and the Shanghai factory being closed versus that ramp. A lot of people are saying, earnings are still going to be pretty high, still potentially going to be really strong on that front. But I'm not as convinced as some people. So I'm going to switch to this screen over here because that's where we're going to be seeing the results come out. 1 second. Let me share this different screen, and then Chrome tab. Here we go. What's this one called? Tesla Investor Relations. This one. All right. So what we see, we're waiting for the deck to appear over here, and that's generally where we're going to be seeing stuff come through. So just while we're waiting for this, there's a Q&A over here, which is a bunch of questions. It was extremely bad in terms of the questions that were in there before. I have them open. We're going to go through those questions and what people are asking before we get there, just so we're aware, so we're not surprised by when they come up. There's a few interesting questions in there, specifically the one about 4680 cell progress. We've heard nothing. So at one point, Tesla were posting like photos on their account. Elon was retweeting with the structural pack and people signing off on, the first series produced one, and people are getting like extremely excited by it. So it'd be interesting to see what the progress is. I don't know if you're aware, but Berlin and Shanghai were closed for about 2.5 weeks at the beginning of this month. So that's going to affect Q3 numbers a little, well, quite strongly, because what they were doing is they were upgrading the production lines for the 2170 cell-based Model 3, Model Ys to increase capacity. And they're going to be increasing capacity to 22,500 a month in Shanghai. 1 second, I'm just putting the do not disturb my phone because it's vibrating. So we're going to see a benefit starting like now, hopefully, but it isn't really particularly clear as to what the Q3 impact is going to be. It probably means Q3 is going to end not at the 400K plus that it could potentially have been, but more at the, have we got any results yet? No, not yet. So it's probably going to be, I'm not sure, maybe 360, 370, something like that. But Q4 is where the potential excitement is really going to be. Another question is Cybertron Timeline. Again, we've heard absolutely nothing since the last update 3 months ago, really, and that was pretty vague. It was like, yeah, maybe at the end of 2023. They've recently filed for an expansion in Austin. We don't have a question on this in the Q&A. They filed a thing with the Texas authorities to expand the brand new gigafactory they've just built. The inference that I took from the way that was put together is that potentially that's going to house some of the additional space that they're going to need to go and put the metal stamping and stuff like that for the Cybertruck. There's been no real news other than this filing that we saw, and we have it's not one of the Q&A questions, so I don't know if one of the analysts they're going to call live is going to ask it. Another question is going to be what is the Berlin trajectory? Because Berlin was ramping up a little bit faster and they've upgraded the production line, but how quickly is it going to get to any meaningful production? Because we at the beginning of the ramp, we're seeing a whole bunch of stuff. We were seeing here we've manufactured the 1,000th car, we've hit 1,000 a week, all of that kind of good stuff. But nothing really recently. So this is the one thing that's slightly concerning as a shareholder. What people are saying, or is it the same person? No. Have I seen the latest pictures of the Cybertruck? Yeah, I have. It has a very, they've made a few bits a little bit more road legally. I'm not sure about that giant wiper at the side. And I'm not sure about the patent. Apparently Tesla have a patent for having a laser that evaporates the rain from your windscreen. So it finds a raindrop and evaporates. I'm not entirely convinced as to how close that kind of technology is, but we'll have to see. Where is oh, here we go. We've got the deck. Oh, thank you so much for the donation, Tara Kels as well. Thank you so much. Really appreciate it. We've got the numbers. I'm sorry, I've got to jump in the numbers. Right, let's go. Ooh, all right. So automotive revenue is down significantly. We're down 2.2 billion automotive revenue and down 300 on regulatory credits. So that's not quite the 3 billion that it could potentially have been if it was 1-to-1 on the 18% down of production, but that's still significant. And I think it's going to surprise a bunch of people. We've got EPS, which was 195. The street estimate, I think, was 218. So on the GAAP basis, we're a bit lower there, and I was kind of expecting that to happen. GAAP gross margin, oh my God, 25% overall. Automotive gross margin, 28. That's better. This is better than people expected, but this is indicating that we are going to see some really bad numbers with energy when we're going to see it. Oh, share screen, 1 second. Sorry, I thought it was going to be on this. Share screen. Chrome tab. Sorry about this. Here we go. All right. Technology. I apologize for this, guys. So I just got a bit too excited. I was jumping in. It opened a new tab, and I was sharing a tab. All right. So 14.6 billion automotive revenue, 27.9% automotive gross margin. That's slightly better than I think some people feared it was going to be. And we're going to see some of the details a little bit further down. 16.9 billion total with a 25% total GAAP gross margin. So that doesn't bode well for what we're going to be seeing in energy. Earnings per share is, where is it? I'm missing it here. 195 over here. So the numbers are probably roughly where I thought they were going to come out. Probably not too many surprises. I don't know if what people were thinking. I know a lot of people saying automotive gross margin is going to be really high, but the point I was making earlier, the fact that the Shanghai factory was closed does not mean that you stopped all costs associated with it, and this is indicating that a lot of the costs were still ongoing. And it will be interesting to hear what people are going to say about that. But let's read some of the highlights that they have over here, just so that we see what they think is the most important. Then we're going to go through all the numbers and see what we think is the most important. Okay, operating cash flow less CapEx, free cash flow of 621 million in Q2. And here we go. And this is a significant drop. I was slightly fearing, I had even a note here saying, will free cash flow be negative? Not quite negative, but that's pretty significant. In total, $800 million increase in our cash and cash equivalents in Q2 to 18.3 billion. That is a surprise, given there's probably quite a lot of expenditure and profitability of the business was a bit low. Given that, we'll be seeing when we go through the detailed P&L as to how that happened. Profitability, 2.5 billion GAAP operating income, 14.6% operating margin, pretty decent for the operating margin. 2.3 GAAP net income, 2.6 billion non-GAAP net income in Q2, 27.9% GAAP automotive gross margin. And let's see what the commentary is. Operations, more than 1,000 vehicles produced in a single week at Gigafactory Berlin. Yeah, we heard that many weeks ago now. I think highest solar deployment in over 4 years. Oh, solar, great. The thing that doesn't make any money. Very exciting. All right. So we continued to make significant progress across the business during the second quarter of 2022, though we faced certain challenges, including limited production and shutdowns in Shanghai. For the majority of the quarter, we achieved an operating margin among the highest in the industry of 14.6%. Positive free cash flow of 621 million, and ended the quarter with the highest vehicle production month in our history. So this is really important. If you didn't see the little note in the vehicle production numbers, they didn't mention the specifics as to what the number was, but they said that June was the highest production a month in Tesla's history. So that potentially bodes really well for Q3. So obviously July is not going to be a record month because Shanghai and Berlin were closed for the refitting, but potentially August and September are going to be really interesting. People saying the Tesla stock is up 5%. I guess some of these numbers on the net income front are encouraging. Maybe people were scared there's going to be even worse. I was kind of scared that potentially we're going to be seeing negative cash flow, but we'll see. Anyway, new factories in Berlin, Brandenburg, and Austin continue to ramp in Q2. Gigafactory Berlin, Brandenburg reached an important milestone of over 1,000 cars produced in a single week while achieving positive gross margin during the quarter. From our Austin factory, the first vehicles with Tesla-made 4680 cells and structural battery packs were delivered to our US customers. This is a very nondescript thing. With Berlin, like, hey, we managed to hit 1,000 cars a week. And this is why the 4680 progress is the number one question. So Tesla is ramping up 4680 production at Cato Road. They're also building a facility in Texas in the Gigafactory for producing them. But they also have LG, Panasonic, whoever else it is, Samsung, a bunch of different major players who are themselves building factories in different locations for producing these cells for Tesla. So the long-term optics are pretty exciting, although I think most of these guys are quite a way away from being able to commercially produce them. But we haven't really heard anything. And this statement over here kind of makes me think it's not ramping anywhere near as fast as they would like. We're continuing to invest in capacity expansion of our factories to maximize production. A completely nondescript sentence that says nothing. The energy business made meaningful progress in Q2 as well, achieving higher volumes with stronger unit economics. This resulted in an overall record gross profit. Customer interest in our storage products remains strong and well above our production rate. We knew that because all the batteries are being pushed towards cars at the moment because they can't fulfill all those. With each of the Fremont and Shanghai factories achieving their highest ever production months, with each of the Fremont and Shanghai factories achieving the highest ever production months and new factory growth, we are focused on a record-breaking second half of 2022. And this is interesting because that's new. We knew that June was a record-breaking month, but they're kind of clarifying that both of their two existing major factories were setting records. Well, and obviously, Austin and Berlin also set records, seeing as it was their first quarter. Okay. Let's look what else we've got, and then we're going to come to the detailed numbers at the end of the presentation. Total revenue grew 42% year-on-year. Year-on-year metric, probably not the most useful here, given what's happening. Growth in vehicle numbers, increased average selling price. That's the bit that we mentioned just before. We got the numbers because they've been increasing prices earlier on this year, quite high. Growth in other parts of the business. We'll see. They mentioned solar earlier. I'm guessing maybe that's what it's referring to. Our operating income improved year-on-year to $2.5 billion in Q2, resulting in a 14.6% operating margin. Year-on-year operating income was primarily impacted by the following items: increased ASP, growth in vehicle deliveries, profit growth in other parts of the business, lower stock-based compensation expense, good, about time, higher raw material, commodity, logistics, and expedite costs, and minus higher per unit costs in Shanghai due to shutdowns. This is the ongoing cost even when you're producing, minus negative FX impact. So this is going to be something we're going to be seeing in a whole lot of companies in this earnings. We saw it in yesterday with Netflix. We saw it today with Tesla. We're going to see it a lot. I think pretty much every single company is going to have this. So the dollar has gone absolutely bananas in the last several months. It has now reached parity with the euro. It was 1.2 not very long ago. It is going extremely strong relative to many currencies around the world. And that means that for any company that sells its services around the world where, say, a large chunk of their sales is outside the US, that means if their prices are not being live adjusted, which in this case, you can't go and say, oh, your car is going to cost 20% more because the dollar shifted. That means that when you convert it back into dollars, the revenues you're going to be posting are going to be a lot lower. Note this whenever we're looking at any of the other companies doing quarterly earnings in this quarterly run. Bitcoin impairment. I still haven't seen what the number is. I'm guessing people are already commenting. I haven't seen what it is. Tesla sold Bitcoin. Oh, that's going to be exciting. Quarter-end cash equivalents, short-term marketable securities increased sequentially by $902 million to 18.9 billion Q2, driven mainly. So I'm guessing I was asking, how did they do it? Did they sell Bitcoin? Driven mainly by free cash flow of 621 million, partially offset by debt repayment of 402 million. As at the end of Q2, we converted approximately 75% of our Bitcoin purchases in fiat currency. Good. I'm hoping they did it earlier during the quarter. We'll find out. Conversions in Q2 added $936 million of cash to our balance sheet. So if they sold 3 quarters for 936, they spent about $1.5 billion when they first bought it. So that means that they sold for a total of what, like 1.3 million billion. So I guess they didn't lose a lot. They must have sold earlier on in the quarter, which is good if they did. So I'm guessing that means that the impairment is going to be relatively low as a result, maybe more like 200 million or something like that. Okay. Operational summary. Anything interesting in here? Global vehicle inventory has gone up slightly. I'm guessing this is difficult to decipher whether this means anything. I'm guessing it's probably more a factor of the factory shutdowns and things like that than anything. Solar deployed, great, has gone from 48 to 106 megawatt. I'm guessing when we look at the numbers will say nothing. But storage deployed, still not going anywhere. Still very low, 1.1 billion. So 1.1, 1.1 was it gigawatt hour. Store and service locations, 709. Mobile service fleet, yeah. Okay, supercharger stations still not growing particularly fast. I don't know how much of the shutdown was playing a factor, but yeah, not encouraging, if I'm honest, on the energy front and the superchargers, because these need to be growing substantially faster if Tesla A wants to provide sufficient service for the cars to produce. Because even though they only deliver 254,000 cars this quarter, that's still something like what, 10% on top of all the existing cars they already had. And I know people are charging at home and they're increasing the number of people who have home charging stations, blah, blah, blah. I get it. But the pace at which supercharger connectors are growing, if they want to expand the network relative to the pace at which they're producing and selling cars, should be faster. And we're seeing that this increased by less than 10%. So hopefully the pace of that's going to pick up, especially as they keep making noises. They're saying they're doing a test in whatever it was, Denmark or whatever, I can't remember, of offering Tesla superchargers and in the UK in 5 locations, I think, to other manufacturers. So if they want to begin doing that, they will need to build a whole lot more superchargers than what they're building. So unfortunately, I've been talking about this for a little while. The pace of the supercharger ramp up, in my opinion, could really do like it's not been growing anywhere near as fast. Because if you think about how much the number of cars that Tesla has grown in this period, order of magnitude, the superchargers are not growing at anywhere near the same rate of speed. So potentially there might be an issue with adoption, because you're going to get negative press. You're going to have people seeing these queues and things like that. Anyway, look at this. This is really, really interesting. So Shanghai now says current production capacity over 750,000. So this always said, I think, 450,000. Let me just quickly check on the old one. What did it say? I think it was 450. No. Yeah, 400. In the old one, it was 450,000. So because of this upgrade that they've done, they've increased this. But also, look at this, California, 550,000. I'm pretty sure that said 500,000 before. Yeah, I'm right. Okay. So because they've now increased capacity in California, this number's gone up. But this is where the really interesting thing is. They're saying that their current capacity for the Model Y production in Berlin and Texas is greater than 250,000. And I'm guessing that this is theoretical capacity once it's fully staffed, once it's going at full speed, because the moment we're producing, I'm not producing anything. Tesla's producing. Okay, the moment they're nowhere near this. Cybertruck, Semi, Roadster. They've added Robotaxi and others, because I did before, and I always said, like, this is curious. Before, this always just said future product. And it was mysterious, like, what is it going to be? And we knew that it was going to be a Robotaxi or the Model 2 or whatever. But now they've actually put it. I wonder what and others is. Is this the bot? Anyway, let's see what they say. In Q2, we achieved record production rates across the company. However, we saw a continuation of manufacturing challenges related to shutdowns. Let me make this bigger for you. There we go. Global supply chain disruptions, labor shortages, logistics, and other complications, which limited our ability to consistently run our factories at full capacity. Yeah, that's putting it very politically correct and mildly. Obviously, it's difficult to kind of say, hey, China shut us down for a long time, and we're not quite sure exactly why, without annoying the authorities. So they have to be extremely cautious with how they word these things. All right, US, California, and Texas. Maybe we're going to get some juice here. Our Fremont factory made a record number of vehicles in Q2. We see opportunities for further production rate improvements in Texas, we have added flexibility to produce vehicles with either structural battery packs or legacy battery pack. And we did see this come out on Twitter and a few social media places and stuff like that. And people took that as a negative thing because basically when they first opened the factories, they said that Berlin is going to produce 2170 cell cars, Texas is going to produce 4680 cell cars from the get-go, and then they changed their mind. And on the one hand, this is a negative because this is indicating that the ramp up of the 4680 cells is not fast enough, and they're not expecting it to get fast enough quickly enough. Because if you knew that in a month or two you're going to be solving these issues, you probably wouldn't go and restructure your internal production to manufacture 2 different types of battery packs to go into the cars. The good news about this is that this means that Texas can now ramp significantly faster by kind of saying, okay, well, the 4680 is going to come at whenever point it's going to come, but we can go and make 2170 cars while that's happening, because there's plentiful supply of those for now, and that's probably good. They're saying the next generation of 4680 cells machinery has been installed in Texas and is in the process of commissioning. Factory output in Texas continues to grow. Okay, so hopefully we're going to get a bit more color on this, and I'm guessing that if we don't get color on this, we will get questions from the Wall Street analysts, because this is the number one thing that everyone wants to know. So wait for the earnings call. I'm going to be covering that live, obviously, on this, and we're going to listen to the whole thing, and we're going to talk about it. So hopefully we're going to see that addressed on that. Then China. While the Shanghai factory was shut down fully and then partially for the majority of Q2, we ended the quarter with a record monthly production level. Recent equipment upgrades will enable us to continue to increase the production rate further. That's the shutdown that they had at the beginning of July. So that's going to be pretty exciting. Oh dear. I need some moderators. I need to appoint. Guys, can all the channel members and Patreons in the Discord nominate themselves to be moderators? Because, oh my God, there's so much stuff in the comments. I need help while I'm talking. For the future videos, we're going to have moderators. So if you're interested in your channel member or Patreon, please go in Discord and let me know. And we're going to get some people moderating this stuff. Okay. By the way, the live call is going to start in 1 hour and 10 minutes. So we've got enough time to read all of this stuff. So we've got 1 hour and 10 minutes. It's going to start at 5:30 Eastern time. If you haven't got a beer or a tea or a water, go and get yourself some. We've got plenty of time. How do I block people on this chat? This is doing my head in. Yeah, block user. Let me try this. There we go. All right. Let's keep reading and then looking at some of the graphs. Berlin. Thanks to strong production rate improvement towards the end of Q2, our team in Germany produced more than 1,000 Model Y vehicles in a single week. We've known this for a little while, using 2170 cells. We expect the production rate to continue improving through the rest of the year. No shit. When you've just opened a factory, you expect it to increase production. Okay, thanks for that. Okay, so here we've got this graph, market share of Tesla vehicles by region. And what Tesla is doing here is it's showing not as a factor of, the total number of EVs, but as the total as a fraction of the total number of all cars sold. And you can see here what you would expect. China is growing. See this green line over here. US is growing. US, Canada. Europe is flat. And the reason it's flat is because they didn't ship cars at the beginning of the quarter over to Europe. And so they didn't sell anywhere near as many this quarter. So this red line flatlined because of that. Pretty obvious. It's kind of interesting when you think about this, because there's a lot of people on social media, on Twitter, etc., talking about Tesla's losing their market share of EVs. All this competition is coming. The competition has been coming all over itself for quite a while now, and the competition is coming. This is the thing. I think there's a lot of people in the Tesla community who like to make this kind of narrative that everyone else sucks and only Tesla is a good car company and only Tesla will survive this and only Tesla is going to be there at the end. I'm not sure I like that narrative because I just don't think it's true. And there are other companies who are doing this company. Everyone talks about GM and how they're failing, and they are failing relatively spectacularly. But there are companies that are doing pretty well. If you look at what Hyundai and Kia are doing, those guys are like way ahead of most people. Volkswagen started off all right with their ID series, but sort of gone back to making single platform cars for ICE and for electric, which is really not helping. BMW are in the same trap. But there are Chinese manufacturers, BYD, etc., that could one day break out, although there's a lot of issues, regulatory, etc., as to whether they're ever going to be able to do that. We'll have to wait and see. But let's keep on reading. As of the end of Q2 2022, over 100,000 drivers in North America had access to FSD beta. And this is critical because the quality of FSD over the last several months has been increasing dramatically. I'm guessing we're going to be hearing a bit about this on the earnings call. I don't know, somebody tell me if I'm wrong. I don't think that Elon Musk is going to be on this call, because last I heard he was posing as a beluga whale somewhere in Mykonos in Greece. Maybe he's flown back. I don't know. But I don't know. I don't know if he's going to be on. I'm guessing he's not going to be on. He's not been tweeting very much, so nobody knows. But if he was, it would be interesting to hear his thoughts on this FSD, because the problem is if he's not on the call, I think we're going to be getting a very, very dry earnings call from Zach, the chief financial officer, and probably very, very dry answers, which is kind of good, because the one time he has done it before, that was the only earnings call where really bad things that shouldn't have been said weren't said, and the stock actually did all right after that. Every time Elon goes on the earnings call, it tends to end not so great. Okay, cumulative miles driven by our customers using city streets supervised autonomy continue to grow at an unprecedented scale. I love how they're specifically putting city streets supervised autonomy as a sort of very indicative thing, saying, look, it is called FSD, but it isn't full self-driving all by itself, because this is the point that the regulators are hitting them with at the moment. There's lawsuits being filed. I'm not going to go into the depths of that. Fleet data is an important part improving and expanding the system, and that is true. They're the only company that have the level of data. If they can convert that data, so data by itself is great. The difficulty then is being able to convert it, and there have been some rumors that the Dojo has started in the last couple of weeks. Dojo is the big supercomputer that Tesla has been building to be able to process all of this data in a far more efficient and better way, to be able to develop FSD a lot more quickly. So it'd be interesting to see if we hear anything about that at all on the earnings call. But let's keep reading. We recently relaunched the enhanced autopilot option in North America for those customers who are only interested in highway autonomy. So if you don't want to pay the $199 or the $99 if you already bought this thing on top for the FSD, you can buy this lesser option, which still lets you drive, on highways, motorways, whatever you want to call them, by itself, but without being able to navigate Los Angeles or San Francisco streets, which is the videos that you see all over YouTube. Okay, vehicle software. Vehicles with adaptive suspension in North America can now automatically adjust to a more comfortable ride height before encountering a section of rough road. So this is part of this, the building and understanding of the surroundings and seeing ahead, and that's pretty interesting, pretty good. Probably improves longevity of the car potentially, as well as comfort and other benefits. So all these little things, they add up over time. Informed by continuously updated data collected by a fleet. Our latest vehicles now use Tesla Vision to tighten seat belts earlier in a wide array of frontal crashes. So if page 19, we'll see what it says on page 19. Let me just write down page 19. Seat belts. All right. If you're just joining, by the way, welcome. Thank you for joining. We're going to be we're just going through the report now. We're going to be going through the numbers in a lot more detail in a second. In 1 hour, we're going to be listening to the live call. So we're going to be seeing what happens on that. I'm guessing it's going to be relatively dry, which is a good thing if Elon's not on it. However, we won't get any of the juice on, we're going to get very politically correct and very thought out, pre-prepared statements about 4680 cells. You'll notice Zach will probably be reading out answers to questions, even for the live questions, because they're probably pre-prepared answers to each of those questions to read out. So if that's the case, well, good for the stock, not so good for us investors and trying to understand exactly what's going to be happening. All right. We expanded on the UI customization introduced in V11 software update by allowing vehicle controls such as defrost, windshield wipers, and seat heaters to be one touch away. So improved UI continuously, because a lot of people were complaining they removed some of these features from the main screen and they put them back. Battery powertrain manufacturing. The architecture of electric vehicles allows us to rethink vehicle design and the manufacturing process beyond what was possible in the combustion engine era. Okay, that's not very new. Thanks to large castings and parts consolidation, the robot count in our body shops and new factories dropped by over 70% per unit of capacity compared to our first iteration of Model 3 body shop. And that's significant. If you saw those pictures of those giant gigapresses that Hydra produce, it allows you to produce the front and the back of the car, then put them together instead of producing hundreds and hundreds of individually pressed pieces and then weld them together. And, you know, there has to be a bot that moves and welds this particular piece in its place. So that is not only just better, it has less failure points. It is far quicker because, you know, you don't have all the individual little processes. It is far quicker also because you don't have the issue of processes stacking up, and if any one process anywhere down the line fails, and that becomes an issue. But then you also have reduced costs, reduced weight on the car, which increases performance because you don't have all the welds and all of that kind of stuff. So there's a whole lot of, it's structurally stronger. There's a million different benefits to this, and it's surprising that all the other car manufacturers are just looking at Tesla doing this and just looking and going, yeah, we can't be bothered. You know what? They can do that. It's obviously better in every way. We love just doing things exactly how we always used to do them. In fact, let's just take the exact same ICE car that we've made before, the exact same structure, and just fit a battery inside somehow and call it an EV. And that kind of thinking, which is adapt to the existing process rather than design a fundamentally new one, is probably the primary reason why so many of them are failing to actually get anywhere near Tesla in terms of numbers, in terms of being able to produce it. And many of the big companies like Ford, like GM are producing cars that they sell at a loss as a result. You know, every car that goes out, they're losing money on. So they're not just not earning money. They're not incentivized to make any more. Okay. Our quest for simplification is not over. We will continue to drive simplification further with every new product and every new factory. Great. So what are these graphs over here? Cumulative miles driven with FSD beta millions. I didn't see this chart before. I don't think it was here. So that's interesting. Just shows it's going up. But look, at the beginning of the year, they added a bunch of people, but over here, I think they expanded the number of people who had access. So the number of miles driven is increasing. And this is substantial because this is orders of magnitude, I think, more than most of the competition who are sort of driving, you know, remote controlled cars and calling them self-driving. A whole different story. Body shop robot count per unit of manufacturing capacity. I love these guys because they're different in every single one of these presentations. So something new, but look at this. Model S Fremont, no scale given other than 0. So these are zeroed, but it doesn't even say if it's log. I'm guessing it's a linear. Model 3 Fremont, Model Y Fremont, Model Y Austin, and Model Y Berlin. So they've reduced significantly Model Y in Austin and Berlin versus Fremont. And that's really, really good because if you think about it, if you look at the difference between the process over here, so you know, these new factories are going to be more cost efficient, higher margins, faster production. You know, they're already saying that Shanghai is going to be producing at 22-something thousand a week. The cool thing is, Fremont is already producing at 550,000 Model 3 Y cars. And this is what those two look like in terms of how many robots takes. If they take some time in the next quarter or two, I don't know if they will or not, but if they do, to go and redesign the production lines there and shut the factory down for a few weeks to go and change it and get somewhere near this and then be able to ramp it up, I wonder if they can increase the Fremont production by a substantial number as well, because this is kind of indicating that there's a lot of potential there that is currently not being tapped. Okay, energy storage. Energy storage deployments increased by 11% year on year in Q2 to 1.1 gigawatt hours. And this is pretty meaningless because if you look at the chart, it's just been flat for the last 3 years, 4 years now, almost. So it's kind of cool. And this is where the future really should be. But potentially the one downside here is any analysts who value the business on energy in the next decade me included, are probably going to be looking and saying, look, I'm just not seeing any meaningful commitment at the moment. And it's questionable as to when that ramp is going to start, because this is potentially a huge business for Tesla. But we've been saying the same thing for like 2 or 3 years now. And it's still not really going anywhere. So somewhat disappointing. The commentary is very limited on this. It's just great. It's growing 11% year on year. When Tesla's trying to grow 50% year on year overall as a business, this is way below just the Tesla, its own average. And if this is going to be any sort of meaningful business for Tesla, this needs to be growing faster than cars at some point. Maybe if they solve the 4680 cells, maybe that's when we're going to be seeing the ramp. But if that is the case, probably still a few quarters away from starting to grow that part of the business. Okay. Mainly due to, so the increase by 11%, mainly due to semiconductor challenges, which are having a greater impact on our energy business than our automotive business. Demand for our storage products remains in excess of our ability to supply. If you're not supplying, then it's going to be in excess. We're in the process of ramping production at our dedicated Megapack factory to address the growing demand. We're in the process, okay, so this is good because they didn't have this statement before in previous quarterly reports. So they're kind of saying, look, we are doing something about it. Maybe this is the first step on the way there. They're going to be doing something. We'll see. We'll see if anything comes from it. Solar. I'm guessing. What is the Megapack factory? Is that Nevada? I'm guessing Buffalo Solar, right? And batteries for cars. Do they manufacture and superchargers? Do they manufacture Megapacks in Nevada? I can't remember. Solar deployments increased by 25%. Year on year in Q2 to 106 megawatt hours, the strongest quarterly result in over 4 years. Although we continue to experience import delays beyond our control on certain solar components, we have expanded our supplier base to enable growth in this business. Our solar installation team continues to improve installation efficiency, enabling higher volumes and stronger economics. Okay. Solar, I'm guessing what we're going to be looking at the numbers is still a relatively tiny business, and my models are not showing how it's going to be any meaningful contributor to long-term Tesla valuation as an investor. So I generally don't really care, if I'm honest, at the moment. That's my personal take on this. In Q2, services and other businesses returned positive gross margin. Okay, so they're saying on a gross basis they're making money on this. Great. The used car business remains strong, particularly as interest in electrical vehicles expands, and particularly because used cars are costing more than new cars over the last few months. Not surprising. Additionally, we are growing merchandise, Tesla-owned collision centers, and related services. The Supercharger business, which is part of services and other, is increasingly serving both Tesla and non-Tesla customers. And this is the point I was making. This is all great saying this, but if the numbers are not showing that you're growing it significantly, I'm not seeing this come through in the numbers yet. Maybe it will. Maybe they're working on it. To help accelerate this transition to sustainable energy even faster, we're excited to open up a global, fast-growing network to other AV customers. So if you're going to be doing that, you really need to increase the supercharger numbers a lot faster than currently increasing them. Okay, outlook. What do they think is going to happen? Volume. We plan to grow our manufacturing capacity as quickly as possible over a multi-year horizon. We expect to achieve 50% average annual growth in vehicle deliveries. This is the same thing as been saying for a long time now. The rate of growth will depend on our equipment capacity, factory uptime, operational efficiency, and capacity to stability supply chain. Great. So we want to grow at 50%, but it depends on things. Okay. Cash. We have sufficient liquidity. Yeah, okay. Statements that don't mean anything. Profit. While we'll continue to execute on innovations to reduce the cost of manufacturing and operations over time, we expect our hardware-related profits to be accompanied with an acceleration of software-related profits. And this is critical because FSD and other software-based products, because remember that they're building these cars the way you can go and buy apps and all this kind of cool stuff in the future. That's going to be quite an exciting part of the business over the long term, especially if robotaxis actually come to fruition. All right. What else we got? Product. The pace of production ramps in Austin, Berlin, and Brandenburg will be influenced by the successful introduction of many new product and manufacturing technologies in new locations and ongoing supply chain related challenges. Factory ramps take time, and Gigafactory Austin and Gigafactory Berlin Brandenburg will be no different. So don't expect anything particularly soon. They will grow, but it's not going to be next quarter. It's going to take a little time. It took 2 years for Shanghai to really get to like big volumes. They were stuck at the sort of 10, 20,000 mark for a little while, and then they grew from there. We're making progress on the industrialization of the Cybertruck, which is currently planned for Austin production subsequent to the Model Y ramp. So we'll get one of the most popular questions. We're going to read the questions in a second. Is when is the Cybertruck coming? That's one of the questions I want to know. My model says 2024. A lot of people saying, hey, it's going to be early 2023. Given that we're at the end of July now, and we're still talking, hey, some point in the future, maybe expanding the factory. We first need to get a Model Y ramp going. This is saying currently planned for Austin production subsequent to the Model Y ramp. So, okay, maybe it doesn't have to wait all the way to the end of the Model Y ramp, but presumably has to wait at least a few quarters for the Model Y ramp to get to any meaningful numbers before they're going to be manufacturing Cybertruck. So I wouldn't hold my breath too much over exactly when the Cybertruck is going to arrive. Remember, we still have to have all the testing, safety testing, mileage, etc. We're a long way away. Some pictures. What's this? Fremont factory, 2 million vehicles produced. Cool. They have a Tesla in there, some factory workers. Gigafactory Berlin, Model Y General Assembly. And this is the much newer factory where you can see all these automated robots producing the car. If you just talked about robots and how they are so phenomenal and how you've just done away with, so many pointless processes and how it's so automated, show the big giga presses and stuff. Oh, here we go. What's this? Gigafactory Berlin, the paint shop. Here is the paint shop, which looks like hands doing something to the car. There, very exciting. Is this a real photo? I guess so. I guess this bag over here is indicating up here is indicating it's a real photo. Gigafactory Texas solar panels. They're spelling Tesla on the roof. Very funky for everyone flying over to Austin Airport. It would probably be more effective if you just put batteries all over the thing, but what do I know? Gigafactory Texas body shop. Maybe they will. Maybe they're going to cover the whole thing. Maybe just spelling it out first, and then they're going to fill the whole rest of it. I don't know. We'll see. Body shop. What is guidance? Somebody saying, but Tesla don't ever provide direct guidance on specific numbers. It's always very wishy-washy. So, unfortunately, we're not going to be seeing much of that. Gigafactory Shanghai exterior. We haven't really heard anything about Gigafactory Shanghai's expansion. So they were due to complete expansion in April, May, and not this latest thing. That we're seeing the expansion in the production line, the improvement in the production line, but an actual physical expansion to the factory. They were building it, and then it sort of got paused, from what I understand, because of the COVID shutdowns. Haven't really heard much about that, or the potential new factory site. So it'll be interesting to see what happens with that. Okay, predictive vision-based seatbelt tensioning. So this is page 19 that they referenced earlier. So this is pretty cool. So what they're saying, lower occupant acceleration Tesla Vision system. So basically, when Tesla Vision says you're about to crash, the seatbelt will pull you back into the seat, so you don't get as much of a backwards and forwards movement. Pretty funky if it's true and it works as they're saying. I mean, this sounds like it's quite far ahead of potentially what some of the other car manufacturers are busy working on. All right. So at the moment, from what I'm seeing so far, and I think I'm seeing some comments the same, the P&L numbers look like they're largely being supported by the fact that Tesla sold off Bitcoin. So the big question is going to be, did they sell Bitcoin early in the quarter once they realized that the Shanghai factory is being shut, and once they realized Bitcoin price is crashing? Because they kind of knew that, hey, if we sell a whole load of Bitcoin, then potentially we're going to be, because 1 billion out of that 1 billion Bitcoin is a lot. Okay, let's have a look. Photos. Wait, where are we? Yeah, so there's going to be an annual shareholder meeting on August 4th. Go and vote if you haven't voted already. If you're a Tesla shareholder, make sure you vote. Key metrics: quarterly deliveries down, operating cash flow down, and free cash flow down. So not surprising here. Adjusted EBITDA high. I'm guessing the reason the adjusted EBITDA is reasonably high is because in the adjusted number here, I'm guessing severance payments and Bitcoin, whatever impairment that they did book is not going to be in this number. That's my guess here. Key metrics, trailing 12 months, vehicle delivery. So basically showing on a trailing 12-month basis, everything is great. Everything's going up, even though they had a quarter that was below expectations. So here are the detailed numbers. Let's have a look at the P&L. The problem is if I zoom in, you can't see what the numbers are. So if you can't see this very well, I apologize. You have to look a bit closer on your phone. Whatever. Automotive sales. $2 billion down from the previous quarter, and another $30 million down on regulatory credits. I mean, I'm surprised regulatory credits haven't really started going completely to zero yet. It's just a function of how bad everybody else is at making EVs. Good for Tesla, just printing free money there, but this one's not going to last. Automotive leasing dropping because they're selling more cars direct. The proportion of them that are being sold on lease is lower. So energy generation and storage. Let's see what the breakdown is somewhere further down. But $866 million over here, and energy generation storage cost over here $769. So this is quite exciting. And the reason it's exciting is if you look at these two lines, this line over here, energy generation storage, and the cost over here. Before today, every single quarter pretty much was either break even, like over here, break even over here, loss making. This is the first time when they've made some kind of a profit on a gross basis on the energy business. And that's kind of encouraging. There's question marks as to exactly how that happened because they haven't really been increasing volumes. So I guess there's some cost cutting or just different attribution of things. But it's an encouraging sign, I guess. Operating expenses. So what we've got, R&D has dropped, which is interesting. I'm guessing this is the potentially maybe somewhere in there. Have we got restructuring? Restructuring separate over here. Restructuring only $142 million. Some people are saying it's going to be 250 or something like that. There's some people who really don't like me. Oh dear. No, too bad. If you don't like my analysis, there's plenty of other channels you can go watch. I'm terribly sorry. I'm doing my best. All right. So R&D has dropped slightly. General cost, roughly in the same ballpark. Only 142 million restructuring. We're going to... nothing in here. I want to see the Bitcoin over here. Where is it? Digital assets net has dropped. So they sold $1 billion over here. Interesting. So they sold $1 billion, which is kind of good news, but I'm guessing it's going to be what's propping up their cash position, because their cash position, you can see over here, cash and cash equivalents, has gone up by $800 million. And another, $80 million over here in short-term marketable securities. So so these have gone up, but they've gone up less than the amount of Bitcoin they sold. So in real terms, what we're seeing is a drop in cash so they basically converted some of their Bitcoin into cash to help, or just to get rid of it. I'm not sure why they kept it 218. I'm guessing Elon still wants to go and sell cars for Bitcoin at some point in the future, maybe. I don't know. Maybe they were selling through the quarter and maybe they're still selling. Maybe they've already sold. I don't know. Operating lease vehicles, staying relatively flat. But here, solar energy systems net, yeah, all these numbers reasonably flat, nothing particularly exciting. I think we need to go back up to have a look at what happened with the energy deployment. Where is it? Here we go. Oh, we already looked at this. Okay, energy and solar didn't do anything, and on the profitability, they don't split them out, so we're not going to be able to see it. Okay, so on the cash flow, anything exciting here? Depreciation. So you can see this depreciation and amortization ramping up, and it's because they've completed the factory. So everything they've been spending on capex or building these factories is now going to be depreciated every single quarter. So that's to be expected. We're probably going to be seeing this continue to increase as they're increasing production lines, building new stuff, but then kind of stay flat. So this is good because this is playing into the P&L. So you got depreciation amortization within the P&L, within the various different costs, but it's not real cash being parted. So it doesn't really matter what. Like you've already spent the actual cash on building the stuff in the first place, so it's not a big deal. Stock-based compensation is going down, and this is a good thing for a maturing business. And as a shareholder, that's good. But I'm not really seeing. Was this here? Proceeds from the sales of digital assets, $936 million. Purchased marketable securities. Okay, so they sold some net, I guess. Purchased intangible assets, nothing. Okay. Yeah, so basically instead of booking a massive loss on the Bitcoin, they went and sold it instead. Fair enough. Yeah, I'm not seeing anything else that's exciting. So I'm going to see if there's anybody have any questions on here. But this is interesting because if you kind of look at the performance, cash got propped up by the Bitcoin sale. The fact that they sold the Bitcoin before it dropped even further was kind of a good move because it prevented the P&L from looking even worse than it already was. Because over here, when we're looking at this number over here, income from operations, and then the net income number over here, if we had, say, 450 to 500 million worth of Bitcoin impairment on here, and this was, 1.7 or something like that, $billion, then potentially, if we're going to be seeing, on a diluted basis, this number dropping by what is it? I don't know, a quarter or something like that. That would probably spook a bunch of people if this number was more like, I don't know, $1, below $1.50 or something like that. But getting rid of Bitcoin at the right time has helped, and I'm guessing that's what's propping up the Bitcoin price at the moment. Let's see what's happening. Tesla share price. I'm going to go and switch screens. Stop the screen. Share screen. Which one am I on? This one? This one. What am I doing? Tesla. All right. What are we doing after hours? Nothing. So it's spiked. This is kind of interesting. This is because a lot of people saying, hey, Tesla going to the moon, Tesla up 5%. So I think what happened is people saw the headline numbers and immediately inferred, oh, everything's great. And then they began reading and trying to understand exactly what happened and why it happened. And suddenly the numbers are not quite as exciting as they were. Okay, so we have 40 minutes until this call is going to be. We're going to open the call over here so that we have it. I'm going to register for it in just a second. It's happening at 10:30 p.m. my time, which is in 40 minutes, 5:30 p.m. Eastern time. I don't know where you are, but you can figure it out. 40 minutes time. But before that, let's look at something that is quite interesting, which is the questions that people are asking. So during this earnings call, we're going to be having first the probably Zach Kirk talking through the numbers, and then we're going to be seeing some questions. And we're going to be seeing two sets of questions. There's these questions from the shareholders, and there's most shares top voted. So most shares is the number of shares that have voted for the question. So the number of votes is not the same thing as the number of shares. This is the number of shares represented. I've already voted for these questions. If you haven't, there might be still time. If you have questions, if you have shares, go and vote. But here's the typically they go through the first several in this list. So they're going to be definitely going through these, but here we go. Chinese EV manufacturers seem to be doing a better job than their Western competitors, excluding Tesla, at innovating in software and design. How can Tesla make sure the company is staying ahead of these manufacturers, both within and without China? It's an interesting question. The one counterpoint to this, anonymous institutional investor asks, the one counter to this question is there is a big gap in manufacturing and selling cars in China to manufacturing, selling cars in other markets, say Europe, North America, Australia, some other European, Asian countries, because the standards of manufacturing in terms of safety, in terms of how the cars are constructed and things like that, are very, very different. And there's a long history of Chinese manufacturers being simply unable to go and move into these other markets because they can't go and hit the necessary levels of safety, just because the design in the cars, it looks good. It looks good, it works nice and stuff like that. But in terms of some of these underlying fundamentals, now I'm not saying that all of them suffer from this, but there's definitely going to be some work required for some of them to go and do the switch over. So although there is a lot of competition within China, it's not necessarily going to then translate to that competition automatically. And that's why we're not necessarily seeing them go and expand very, very quickly to other countries as well. But what we got? When will Tesla have a unified vector space for both the static and moving object network? Will this be version 11? So at the moment, they're going through many iterations of the version 11 FSD software. If the latter, can you explain what makes it a difficult problem in layman terms? So they went from a much more rudimentary way of building the computer's perception of what the space around Tesla looks like to using a vector space. I think it was beginning this year. I think it was like in January. Somebody can correct me if I'm wrong. People are saying I'm wrong. Yeah. There's a good reason why you see a lot of these cars being sold in very specific markets, but not others. But anyway, Elon's been referring to this FSD issue quite a few times, and the benefit here of having a unified vector space is that you have all the different objects being modeled within the same space, but you need to solve for the computational issues around how you're going to be doing that. But I'm guessing the problem is computational, so it's not necessarily that they can't do it, but they have to split out the processing of different things into different nodes, just because at the moment, I don't know. It'd be interesting to hear the answer. Although if Elon's not on the call, I'm not sure who else is going to be on the call and if they're going to be able to answer. But the real question here is, how far away is FSD from getting really, really good? I think that's what these guys really want to know. You made the right economic call before most on inflation when you diversified into Bitcoin. Really? It has since shown it's not much of a hedge in the real world test of the last few months. Who could possibly have thought? How do you think about it as an asset over the long term, and what do you need to see to change your view? I'm guessing if Elon is not on the call, this is going to be a really boring answer to this question. If he was on the call, we'd probably have a really, really bad answer, which would tank the stock. I don't know. Maybe he's on the call. I don't know. Does anyone know? Elon noted 4680 plus structural pack is not yet optimized. Can you please? Yeah, he tweeted saying there's still a long way to go. It's just the start. Can you please share the general path of 4680 and structural packs in terms of one 4680 question, other quite far down, but really I think the real question is this one here, 2 questions further down. How is the 4680 ramp going, and is Gigatex producing cells yet? So I really hope that they get down to here, although there's so many questions up above that maybe we're not going to get that far. That I think is the most important question in here, and the one that I want to know. How do you feel the progress of SD is going, and does Andrej Karpathy leaving have any significant impact on Time's potential progress? So for anyone who hasn't been up to speed, Andrej Karpathy was the guy in charge. So he wasn't in charge of FSD. That's somebody else. He was in charge of the AI part of the business, but he went on sabbatical whenever it was 4 or 5 months ago. And then sort of he went to sabbatical, which was meant to be 6 months, and then sort of just as it was coming up to him coming back, he then decided to go and leave Tesla. And I think a lot of people suspecting that maybe that's what's going to happen. It's rare for people to go on a long sabbatical for no particular reason, and then there not be other kind of thoughts. However, although he is reportedly a very influential guy within Tesla, and he was touted strongly as sort of the guy who's going to be bringing all of this stuff to fruition last year when they were having the whatever it was called, the AI day or whatever, and they were talking about the new computers that they were trying to construct themselves and all that kind of stuff. but he's now left, and that probably will leave a gap. However, the development of FSD has actually, I think, increased pace rather than anything since he's gone away. So it doesn't look like it's really hindered any progress so far. I don't know what the impact is going to be. Anyway, those are the questions. Okay. Oops. Stop screen. All right. Let's read through a few comments and see what people are saying. Let me move this to over here so that I can actually look slightly more into the camera. I apologize, it's extremely hot here. The weather is not kind to us over in Europe. People are saying, yeah, he's not on the call. He's live on a couple of live streams to pump fake coins. Well, he's not live on those streams. There's just these ongoing live streams on YouTube that show the same thing with like ARK Invest, Kathy Wood, and him and other people. It's pretty bad. Somebody's saying he is on the call. Either Sasha and took a shower just before, so it was 40+ degrees. It is extremely hot. I'm drinking a copious amounts of water. I don't have AC installed because I'm in the cow shed. This is not my house. This is my office. My office is in a cow shed on a cow farm. Long story. What else are people saying? He sold right after 17th of May, somebody is saying. I don't know. Tweeted May 17th, the Tesla sold. Oh, so apparently on the 17th, they said that they did not sell, so it was at some point after May 17th that they did sell. Well, any other good comments? Okay. Enjoying a hot sauna, I see. Okay. So let me share the screen over here. 1 second. How do I do this? Share screen. Chrome tab. We want to see the Q2 results. Okay. All right. So I'm just opening this so that we can go and look at the P&L while we're talking. Let me just make this full screen over here. Okay. We don't have aircon in Europe, in the UK, really. Like pretty much nowhere, except for if you're in a massive office building or something, you're gonna have some kind of like conditioning. But because we never, ever have it go hot, except for the last 3 days, we don't have it. So it is what it is. I apologize. Hey, Daniel. I may or may not be doing a video with a plug for the Daily Upside at some point, but here is a free one. If you haven't set it up already to a free newsletter, go and do it. But hopefully we'll do a video at some point soon. All right. So the call is the call starting now? No. People saying it's now? No, it's not now. It is in half an hour. Don't get me scared. Okay, I'm gonna register for the call over here. But the call is starting in half an hour. And nobody seems to know if Elon's going to be on it or not. I'm going to register so we can listen to the call, and it's starting in 28 minutes. All right, great. Can I please spread FUD so we could all buy Tesla in the 600s? Thanks in advance. Unfortunately, my following is so small that any FUD that I produce will have exactly zero impact on absolutely anything. I always love it. I talk about stocks quite a lot, and I always love it when somebody goes and makes one of those accusations saying, "Oh, Sasha, you are, you are this, that, you are spreading, you are forcing the stock to go up and down." I'm like, this stock is valued at $1 trillion. My tiny YouTube channel with the 3.5 people who watch my videos is exactly going to do absolutely nothing. Anyway, just before, so we've just gone through the questions that we're going to be asking, but just before we get on the earnings call, the one thing that I think a lot of people are going to be really asking the questions about is nobody really cares about what just happened with the Q2. It's happened now. It's gone. The numbers are not great. The numbers are particularly not great if you go and exclude all the money they've got from Bitcoin and how they've managed to avoid having to put a massive impairment charge on as a result. By the way, I just realized I haven't looked at the debt situation. Should we have a look at the debt situation? Where is it? Balance sheet. Okay. Make it big. All right. Ooh, that came down again. Am I reading this right? That came down again. Okay. So they've even managed to repay a little bit more of their debt. I'm guessing next 2 quarters, this debt is going to go away completely. So that's going to be pretty good. For the first time in a long time, Tesla's going to have no long-term debt. So was that 300 million or something? All right, great. So when they're going to be on the call, I think a lot of the stuff that people will want to hear will be relating to what they're going to be doing about Q3, Q4. All the statements that we've seen in this report have been extremely nondescript. All this kind of stuff up here. Let me just show it to you again. Like, we expect the production rate to continue to improve for the rest of the year. Yeah, great. And on the Texas, they're saying the next generation 4680 cell machinery has been installed in Texas as in the process of commissioning. Factory output in Texas continues to grow. So there's very little specifics, very little information. The one bit of information that they do give is further down, wherever it is, and it's saying, hey, look, it's going to take some time. Factory ramps take time, and Gigafactory Austin and Gigafactory Berlin will be no different. So a lot of people are expecting them to go really, really fast. And so unfortunately, they're trying to reiterate this point that, hey, you're a long-term investor, or at least, if you're not, you probably should be, because you stand slightly better chances of doing something rather than trading things. But they're kind of saying, hey, just hold your horse. It's going to be all right. At some point, these numbers are going to start climbing. And it's not going to happen overnight. And there's a lot of people saying, they're going to start manufacturing 5 million cars per year. There's a lot of channels on YouTube that are probably slightly on the overly optimistic end of things, where they genuinely expect Tesla to start manufacturing cars at some absolutely insane level, like in the next year, 2 years. They expect the share price to be, $10 trillion in a very short space of time, which would mean that, a 5x increase in the most valuable companies in the world today. And hey, maybe they'll become the most valuable company at some point. But I think there's a lot of over optimism, and that's not going to help the share price, because there's generally sort of a problem that we're seeing recently with stocks that are have a very, very big fan base. And Tesla doesn't suffer as much from this as some other stocks. For example, Palantir probably suffers from this more. I have a small position in Palantir. It's one of my smaller major positions that I have on my portfolio as well. But there's this issue where whenever somebody goes and says something negative or points out something that's an issue, you get these like armies of fans that descend unto the person, and they say, how dare you? How dare you spread FUD? How dare you say something really, really bad about my stock? People get really, really defensive about this kind of stuff. It's bad because it prevents the genuine long-term investors being able to actually try to understand, what the actual situation is, what the actual, factories will have issues. Factories will be shut down at times. There will be problems with the 4680 cells. People saying, the moment that factory opens, going to be manufacturing 20,000 cars a week with 4680 structural packs. And I was saying, hey, this is a brand new technology. Just give it a bit of time. See if it works and when it works. By the way, thank you so much for this. That's gonna go towards my air conditioning fund. $4.99. Thank you so much. Really appreciate it. I might buy a beer with that. At some point, there will be more Tesla chargers than Chevron. Does Tesla make positive revenue from superchargers? If yes, how much? Thanks. At the moment, it's a slightly difficult question because initially they were selling a whole load of cars where they were offering lifetime free supercharging. Then they were offering limited, like what was it, 100,000 miles or whatever it was, free supercharging. And the superchargers where like people actually pay, which is all the people who have new cars, They do make a margin. It does vary, and Elon has said that at the moment their plan is not to like unduly ramp up those prices to try to make a really huge amount of money. I suspect that it will be a very big amount of earnings once they start offering it to other people. But if they're going to ever to genuinely do that, rather than just say that they're going to do that, if they're ever going to ever get to that place, they will really have to start building a few more superchargers than what they currently have. So, sorry, I need a drink. I'm losing my voice. We're 20 minutes away. It's a good question over here. From Stuart saying, Sasha, do you think the earnings per share will be seen as a beat from what was expected? No, it is. Well, it depends because everyone has a different. My figure for Wall Street was like 210 to 220, and they ended at 195. So I think it's a slightly down, but I think there's a. Although there maybe was a median, there's a lot of people who consider it was going to be a lot lower. But anyway, I think long term. Back to the question that we had over here, long term, they definitely, this could be a big business. But in my model, I try to understand. So I've got a model for Tesla that I've shared in some videos, and people in my Patreon group and my channel membership who are at T level and above. I have coffee, I have espresso and tea membership levels. I share that model with them there, but in that model, I try to understand exactly like how much they can make from different business lines. And I think a lot of people get very excited about solar and about superchargers. To be frank, like even a supercharger become a really big deal. And if the margins on them are really healthy, it's still not contributing like the sort of money that really moves the needle on Tesla becoming, valued in the many trillions of dollars or something like that. So I just generally don't really see it. I think a lot of people get overly, because when you break down the numbers, it's one of those where you go and look at what is the sum in terms of the actual profits of the entire industries, and then you go and compare it, and it's the argument that people make. Oh well, Tesla is a car company. Look at all these other car companies. Look at how much they're manufacturing. In some industries, though, you do have to compare Tesla to those industries. And when you go and compare them to oil, sure, oil companies, there are some really big oil companies, and oil companies make a lot of money. But by the time Tesla gets there, they're only going to be one-off, because the beauty with electric is it is relatively straightforward to install. It's a lot more straightforward. If you think about the end-to-end chain, then digging up oil and then like processing a refinery, shipping, etc. So I'm not sure it's going to be a particularly big overall contributor. But yeah, this is unexpected, and I guess it's good news. It's good news for me that Tesla got rid of Bitcoin. Everyone's talking about it. What's happening with the price of Bitcoin? Has anyone been looking? One second, let me have a look, and then I'll throw it on here. Bitcoin, there's nothing much. It ran up in the last couple of days. Is at 23,000. I know you can't see the screen. $23,400. But not really doing very much at all. I guess nobody cares. Nobody cares what Elon thinks or what Taylor thinks about Bitcoin. So there we go. Okay. It'd be interesting to see for me in the next couple of quarters also, and I don't know if they'll talk about it. It probably won't, because it's not really that important. I'm guessing this CapEx expenditure over here is going to drop over the next few quarters substantially, unless they start building some new factories. But even if they start building new factories, the actual groundwork is probably not going to happen for a while. This is probably more a question, not for now. And I'm surprised, actually, in the question and answers that we were just looking at, there was nothing about this whatsoever. But in November, Elon Musk said that they're going to be announcing new Gigafactory sites at some point in the second half of this year. And we're now like almost a month into the second half this year. And obviously we have the rumor mill around Indonesia, because Elon Musk has met with the president of Indonesia, and there's raw materials that can be used over there. So that's a potential site. Brazil, he's met with the president of Brazil, in March it was, I think. So that's potentially another site. They were apparently discussing stuff with India, but never got around to actually doing anything there because India did not want to play ball. Because the rumor, I don't know how substantiated this is. The rumor mill was saying that Tesla wanted to go and import some cars into India to test the market first to see how much appetite there is, how much interest there is, etc. India has very strict duty taxation laws on imported cars, which make them exceptionally expensive. Was it like 100% duty, whatever? Anyway, so India said, hey, if you commit to building a gigafactory, we'll talk about duties. And Tesla said, hey, we need to talk about duties before we can build a gigafactory. And I think that Mexican standoff led to absolutely nowhere. So it sounds like that deal is off. But it was sounding like they're going to be doing at least maybe 2 or 3 announcements. So potentially Brazil and Indonesia on the cards. A second factory in Shanghai was on the cards a lot more strongly in terms of like how Elon was talking about China and some of the filings. They first were interested in that plot of land next to where their current factory is, and then they weren't, and then apparently they acquired it, but nobody's quite sure if they actually did. And I guess the question now is, did this make Elon Musk or Tesla or whoever change their mind a little bit about building a second factory in Shanghai? There's a comment here from Steve saying Shanghai shutdown seems more political than public health, as opposing faction the CCP runs Shanghai, and lockdown maybe in a show of power could happen again. Thoughts? Yeah, it sure could happen again. I think I don't know if it could be a COVID shutdown, but it could be something else, right? The difficulty is the regime in China has substantially more power over ordering businesses what to do or not to do. They're a lot more happy to do it compared to like other countries. Sure, we've had shutdowns in other countries too, right? But there's a lot less friction and they have a bit more power to be able to do it. And today is COVID, tomorrow it could be something else. So potentially maybe there's a little bit more risk to building a second factory in China, or at least in Shanghai in the same city, right? That would be bound by the same restrictions. So I don't know if that's going to go ahead just because of the risk. Maybe just ramp Shanghai factory as it is, but then see new sites, maybe East Coast USA, maybe Mexico. I don't know. We'll have to wait and see. But I'm guessing we're not going to be hearing anything on that because there's no questions on that in the questions that people were voting on. And there wasn't anything on that in the presentation. And I'm guessing that the analysts, when they call in, will ask their usual dumbass questions around, is there going to be a stock split? Is it going to be 3-to-1 stock split sometime soon? Yeah, or something like that. Oh, that's a very good comment. Hello, good to see you. So, what do we got? We've got 14 minutes. Let me just check that everything's set up. Normally they play music. That's how you know, but no. You can't see this, but it says 13 minutes 46 at the moment. So we will turn this on as and when we get closer. So 13 minutes until we get the live call. We're going to be listening to that. A good question over here. Let's talk about this question because this is a relatively minor point. But what do you think about reduction in R&D spend, Sasha? So a couple of things. So obviously R&D is within the non-manufacturing staff reduction that happened during the quarter, and apparently a lot of engineers were let go. And apparently, so this is a difficult one because there's a lot of rumor and very little proof or evidence or substance, or a lot of anecdotal stuff. Somebody saying I'm an engineer and this happened to me, but very difficult to know. There's a rumor that a lot of engineers, a lot of people within some of the teams, including the team responsible for FSD and AI, a lot of people there were let go. And on the one hand, Elon's trying to streamline the business, and presumably there is some process in place where they're retaining maybe higher performing people. I don't know, because a lot of people were writing on Twitter saying they were terminated for cause, like for underperformance, rather than for just general reduction in headcount. So there's a little bit of that, but it's kind of surprising when they're in the middle of, ramping up Dojo, trying to get FSD to a place where it's like fully viable. They're apparently talking about this robot, although there's nothing in this presentation about the robot. Thank God. I'm really grateful. The longer that may continue, the better for us, I think, as Tesla investors.
Somebody saying they've sunk billions developing Dojo. Brain McFly. Now it's finished the less R&D expenses. I'm not sure how much of that R&D spend is going to be just that Dojo cost. But the thing is, they're still in the early stages, of building so many of these products, development of Cybertruck, development of future models, robotaxi, etc., etc. It is surprising. It's surprising, and I know Tesla have always been known for running a tight ship, and that's what made them be able to get through 2018 and see the other side. That's what made them be able to turn profitable and now start to become really quite profitable. But even the development of just the production line of the 4680 cells, which I still don't seem to have been able to solve. I'm very surprised. And if you haven't seen it, where is it? It's down here. Here we go. Depreciation and impairment over here. Sorry, looking at the wrong line. Where's just the depreciation and amortization by itself? I don't want impairment. I don't know what part. I don't know how much of this 922 is. There was a number somewhere, 600 something million, I think. Was it up here? On the chart up here. I can't see it. CapEx, I can see. I don't know. I can't see it. Somebody tell me what the number is. My brain is fried after talking nonstop for however long it's been, an hour and a half. I think it was like 600 and something million. So it's dropped. Oh, maybe I'm wrong. I don't know. I can't see it. Anyway, next question. Do you believe that the purchasing Bitcoin? By the way, we're about 10 minutes away, so we're going to be listening to stuff live. Let's talk a little bit before we get there. We've covered the questions. We've covered everything else. We don't know what's going to happen, but it's going to be interesting. Probably. It's probably going to be dry if Elon's not on the call. But anyway, do you believe that purchasing Bitcoin was a mistake at the time? And now, I said at the time that I think it's a pretty bad move because I'm not seeing what the value to the business is. It could have made them some money. It ended up not making them money. I think it didn't endear the company to, institutional investors who don't like companies that like to gamble and stuff unnecessarily. It didn't endear them to being rated as investment grade potentially. This could have been one of the issues, one of the reasons. It probably wasn't necessarily the smartest move for the company to do because, even if you're going to be selling cars for Bitcoin, do you really need 1.5 billion worth of Bitcoin sitting on your balance sheet in order to be able to do that and facilitate transactions? And I know that they have at the time, $17 billion worth of cash, and they have nothing. They have no use for it. But there's probably better uses for cash as a regulated company than just plunking it onto Bitcoin. That's my take. I know a lot of people would disagree with me fundamentally on this, and I'm aware of that. But that's just my take. And I said it at the time, and I still hold much the same view. When is the stock split? I don't know. They haven't announced it yet, I think. What are people saying? Yeah, battery's done. Yeah. Anyway, let's just do a really quick recap, seeing as we only got 9 minutes? 9 minutes before. 1 second. What are we even looking at? What are we even looking at? 1 second. Let me put the P&L on for anyone who's joining who wants to look at the P&L. Just before we get there, let's have a look. Earnings call in 8 minutes. 8 minutes to the earnings call. Okay, exciting. All right. So, quick recap. The P&L looked slightly below expectations, but reasonable given that the Shanghai factories were shut down. And we had an adjusted EBITDA margin of 22.4%, GAAP gross margin 25%, automotive slightly better than I think some people feared at 27.9%. Energy business continued to do approximately nothing, so there wasn't very much there. Contributing business, although in the language around it, they said they're now going to start ramping the mega packs. So that would be good if it's true, although we've heard the same narrative for a few years now and it hasn't come to fruition. One thing that everyone was expecting was about $450 to $500 million worth of BDC impairment.
does not look like it has come through because what Tesla did instead is sell their Bitcoin during the quarter. Well, most of it. They still have $200 million of Bitcoin left, but they sold 1 billion roughly. That's something that was came out as a bit of a surprise, which helped the cash position. Sorry, held the cash position, but did not really help the P&L. So in terms of operating expenses, everything was kind of roughly where people expected it. The one thing, a lot of analysts were bravely saying that Tesla is going to post above expectation results despite the shutdown, because the shutdown will mean that there's going to be less cost. But it turned out from the numbers that we were seeing that the cost base for the factory in Shanghai was probably still higher than people expected, even during the closure. The one kind of interesting thing that we saw in this is demand remains really, really, really strong. So we had 4 days of inventory at the end of the quarter, which is been the same. So basically, there's every car that they make gets sold. Superchargers are not growing as fast as expected. I hope that at some point in one of these earnings calls, somebody's going to ask something about that, because they keep banging the drum, and even further down somewhere, they talk about selling superchargers to other car manufacturers and all that stuff. But we're not seeing superchargers grow at the sort of rate that would enable that in any meaningful numbers, especially in countries like the US. So wait and see on that. We have some issues with 4680 cells, if you read between the lines, in terms of the ramp. They're now intimating that Texas is going to take a little while. They've built it says the next generation of 4680 cells. They've built the manufacturing facility. It's in the process of commissioning. So not quite clear as to how long this process is, how long it takes to then ramp to any meaningful production numbers. Though, however, the good news is that they've changed the Texas factory to start producing cars with 2170 cells. It's probably cost them a quarter or maybe even longer in terms of the ramp, because initially they were not planning to use 2170 cells in Texas altogether, but probably good for the next couple of years in terms of being able to ramp that factory a little bit better. I got thank you so much. Another beer or two. Thank you so much. More gigafactories, AI, FSD, Cybertruck, semi, possible 25K car, solar, insurance, supercharger, and so much more. What makes people not like Tesla? There are good reasons not like Tesla. Like the level of hype around the stock and the level of trading that it sees is insane. It's the most traded stock. If you listen to people on various different trading apps, stuff like investment apps, really, really high daily volumes relative to total stock volume, really, really high options trading volumes, and the split is not going to help with that. And that's not necessarily a good thing when the stock is really volatile. It attracts the wrong kind of, it's not ever going to go down sort of AMC route, probably, but you kind of don't really want to be investing in something where the valuation begins being disassociated from the fundamentals of the business. And even in this list, and I do agree with a lot of it, but more gigafactories, yes. AI and FSD, great. Cybertruck, I think we're still a long way from the Cybertruck coming. I am guessing we're probably at least a year and a half from seeing it being pushed out the door. I have an order for the Cybertruck. I've had it for a while, so I would really like it to come. But I'm guessing that it's not going to come to the UK ever, or maybe in 5 years' time. I don't know. Possible 25K car, that's probably never going to happen, especially given that we're now running at 10% inflation. The 25K car from 2 years ago is now a 30K car. Solar, insurance. Solar, I don't really care about much whatsoever. Insurance, same. In my model, even very high penetration of global markets for insurance. In terms of the actual profit that it's going to deliver for the company versus some of the other businesses is relatively small. I'm just not seeing how that can become a huge business for Tesla. Superchargers, again, the same. So I'm not particularly excited about the back end of this list, but hey, maybe I'm wrong. We'll see. Hope the call will bring some great news. Me too, by the way. What's the time? We've got 3 minutes. 3 minutes until the call. A video explaining synthetic short would be interesting and valuable. In my opinion, Sasha is as diplomatic about streamers giving timing advice as you can reasonably be. Generally, I try to stay away from videos that talk about trading in a way that would somehow promote, encourage it. It is my firm belief, based on data and based on information, that most people, in fact, almost every retail investor, should not ever engage in trading, because the overwhelming likelihood is that you're going to lose a ton of money. And even if you don't, the overwhelming likelihood, if you don't lose a lot of money, is that you will make less money than flipping burgers at your local McDonald's in terms of per hour returns. And that's not just my opinion. That's like, if you look at any research around it, as a trader, you're competing with very limited information, very limited models against huge institutions, model systems, processes. You just don't really stand much of a chance, unfortunately, despite what people will make you think in order to sell you a course on it. But oh, here we go. 1 second. Let me switch screens so that we don't miss it. Stop screen, share screen. I need the tab. I've learned this. 1 second, this one. Can you guys hear this? Just so we can test it before it starts. Can you hear this? I'm moving the volume up and down. Did you guys hear that? Oh yeah, good. So we're ready. We're ready when it goes. Okay, I'll just put it slightly in the background over here. Probably going to get demonetized. Last few times I played their music got demonetized, but whatever. All right. So the call should be starting any moment now. If you're new to this, if you haven't seen these before, the format is going to be, first they'll go through the financials. If it's Zach doing them, it's going to be extremely boring and dry. Feel free to go and get yourself a cup of tea for the questions. Then we're going to have 2 sets of questions. We're going to have the pre-prepared questions, and the pre-prepared questions are going to be probably answered with pre-prepared answers, if it's anything like the last time Zach did this. And then we're going to have the live calls from, and they don't take very many of them, probably 3 or 4 or something like that. And that's potentially where we're going to be seeing something unscripted for the first time during this call. So I'm hoping it's going to be exciting, but don't hold out too much hope. There is a very good chance that we're going to be seeing absolutely nothing. Well, thank you very much for confirming. Look, we've got a channel member in the house. Hello. By the way, if you want to join the Discord, feel free to do it. There's should be a link in the description, or Patreon, whichever you prefer. We have a Discord where we go and talk about all kinds of stuff, investing and not investing. It's fun. Unfortunately, I'm not going to sell you an amazing tip every day for what you should buy or not buy. But if you want to just discuss stocks and other stuff, feel free to join. I need an aircon. Yeah, big time. It is extremely hot in the UK for the last 3 days. I've actually just landed. I was away on vacation, which is why I didn't make a video for a few days. And I landed and it was hotter here than it was in Turkey. And in the UK, we're such ruffians that we don't do an aircon because it's never hot enough for us to need it. Here we go.
Good afternoon, everyone, and welcome to Tesla's second quarter 2022 Q&A webcast. My name is Martin Vieca, VP of Investor Relations, and I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q2 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to 1 question and 1 follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks.
Ooh, Elon's on the call.
Thank you, Martin.
Yes, fireworks.
To recap, Q2 was a unique quarter for Tesla due to a prolonged shutdown of our Shanghai factory. But in spite of all these challenges, it was one of the strongest quarters in our history. Most importantly, in June, we achieved production records in both Fremont and Shanghai. And as a result, we have the potential for a record-breaking second half of the year. I do want to emphasize this is obviously subject to force majeure, things outside of our control. The past few years have been quite a few force majeures, and it's been kind of supply chain hell for several years. Credit to our awesome Tesla supply chain team for overcoming insanely difficult challenges, and huge thanks to the Tesla Shanghai factory team who sacrificed a lot to get the factory back up and running in June and achieve a record output. So also making good progress with production ramp with Berlin. We achieved an important milestone of 1,000 cars a week in June, and we're expecting our Giga Texas to exceed the 1,000 vehicle per week milestone hopefully in the next few months. We're to be clear, we're currently making the cars with the 2170 cells, and Drew Becklina will address some of the 4680 questions later in this call. But it is worth emphasizing that we have enough 2170 cells to satisfy all vehicle production for the remainder of the year. So we're not dependent on 4680. 4680 will be important next year, but it is not important this year.
So it sounds like Texas is 2 quarters behind because of 4680.
That said, we have installed the second generation of manufacturing equipment for 4680 cells in Texas. And even at our established factories like Fremont and Shanghai, we continue to expand capacity. Regarding Autopilot, we have now deployed FSD Beta with city streets driving capability to over 100,000 owners. They're very happy with the capabilities of the system, and we'll continue to improve it every week. We've now driven over 35 million miles with FSD Beta. That's more autonomous miles than any company we're aware of. I think probably it might be more than all other companies combined. So that mileage is growing exponentially. With regard to manufacturing and technology, about 5 or 6 years ago, we said we wanted to become the best manufacturer in the world, and that is somewhat counterintuitively to some people what will actually be, I think, our strongest competitive advantage. We're super pro manufacturing here at Tesla, and in general, we want to encourage other companies to be super pro manufacturing, and in general, I think it is a very important thing to do. We need to make stuff and make it efficiently, and that's manufacturing. So we've made a lot of advancements in manufacturing processes, as we now show in the shareholder deck. Thanks to the large castings, we make the world's largest castings. We reduced body welding robot count by 70% per unit of capacity in Austin and Berlin. So that's call it roughly a body shop that is roughly 3 times smaller than would normally be the case. And I should say it's also lighter, cheaper, and has superior noise, vibration, and harshness. So it's good on every level. But this journey is not over. We'll bring another level of simplicity and manufacturing improvements with Cybertruck, and future products that we're not quite ready to talk about now, but I think will be very exciting to unveil in the future. Our safety team also introduced a feature that tensions seatbelts if the vision system detects imminent collision, which has never been done before. So you can imagine that if you have a seatbelt that only tensions upon impact, you have very little time to tension the seatbelt. The car has literally got to be crunching to trigger the seatbelt tensioner. But because we have vision, we can actually see that a collision is about to occur with 100% probability before it actually happens. And so we can tension the seatbelts, and we can even adjust the airbag deployment because we can see, not just feel. This is a fundamental safety advantage that Teslas are now able to offer. And this is also an over-the-air update. So if this is something that will be in place in all cars that have at least AP3 hardware. In conclusion,
Pretty cool,
we exited Q2 with a stronger production rate than ever before. Our team continues to focus on Cybertruck production readiness and some future platform design. We are expecting to be still expecting to be in production with the Cybertruck in the middle of next year, and we're very excited about that product. I think it might actually be our best product ever. Let's see, and FSD beta is on track to be released for all of North American customers before the end of this year, and hopefully, if we get regulatory approval, we'll also be releasing it hopefully in Europe and some other parts of the world. We're hosting our AI Day in a few months. I think people will be amazed at what we're able to show off in AI Day. So basically, there's a tremendous amount to look forward to in the second half of this year. And I want to thank all of our employees and suppliers for their super hard work during these challenging times. Super appreciated. Thank you.
Thank you very much. And Zach has some opening remarks as well.
Yeah, thanks, Martin.
Very measured so far.
I want to start by congratulating the Tesla team on excellent execution during the second quarter. Although our production volume reduced sequentially due to COVID-related shutdowns in Shanghai, we made substantial progress in nearly every area of the business, and in particular, our global vehicle production rate as we exited the quarter. Our Fremont factory, supported by our Reno team, reached new production records. The Shanghai factory resumed full production, and our new factories in Austin and Berlin are progressing well through their initial ramps. Additionally, our energy business achieved record gross profit with the highest solar volumes in many years. I want to personally thank the entire Tesla team, as I know many of you are listening. You've embodied a remarkable and relentless pursuit of excellence in support of our mission. I also want to thank our suppliers for their support during another complicated quarter. On GAAP automotive gross margin, it declined sequentially to 27.9%. The temporary decline in Shanghai production volume meaningfully impacted margin, including idle capacity and factory restart costs, and also had implications on the mix of regional deliveries. Additionally, as discussed on previous calls, we are working through the ramp inefficiencies of our new factories, which are progressing well, but have had an impact on margin as those factories come online. While we continue to see a benefit from higher pricing flowing through, which experienced some foreign exchange-related headwinds, our cost structure continues to experience cost increases from inflation, commodities, and logistics. The energy business progressed well in Q2, aided by alternate solar supply coming online and progress on unit economics. Our storage business remains component constrained on both Powerwall and Megapack, which we hope will alleviate to some extent in the second half of the year. We are greatly appreciative of the patience and flexibility shown by our customers while we work through these challenges. Within operating expenses, Austin and Berlin related startup costs have wound down as these factories have moved into production and their costs are now reflected in automotive COGS. Additionally, we converted a majority of our Bitcoin holdings to fiat for a realized gain, offset by impairment charges on the remainder of our holdings, netting a $106 million cost to the P&L included within restructuring and other. We also incurred restructuring charges related to targeted staffing reductions.
Yeah, actually, it should be mentioned that the reason we sold a bunch of our Bitcoin holdings was that we were uncertain as to when the COVID lockdowns in China would alleviate. So it was important for us to maximize our cash position given the uncertainty of the COVID lockdowns in China. We are certainly open to increasing our Bitcoin holdings in future. So this should not be taken as some verdict on Bitcoin. It's just that
it's a funny guy.
Concerned about overall liquidity for the company given COVID shutdowns in China, and we have not sold any of our Dogecoin.
That's $17.5 billion worth of cash.
We still have our Dogecoin.
There was no liquidity issues.
Despite these challenges, we were still able to achieve one of our strongest operating margins of 14.6%. Our free cash flows were impacted by working capital related to the Shanghai factory shutdown. However, we expect this will show as a benefit in Q3 as our working capital related cash flows restabilize. As we look ahead, and as Elon mentioned, we are positioned for a record-breaking second half of the year. we're quite excited about this. A couple things to keep in mind as we progress. Austin and Berlin ramp inefficiencies will continue to weigh on our margins for the balance of the year. However, the impact should reduce as we increase ramp. Second, as we've mentioned before, we expect to continue to see recognized global pricing to increase as our backlog flows through. However, macroeconomic related cost increases will also continue to be part of our story. And finally, despite losing more builds in Q3 than expected, we're still pushing to reach 50% growth this year. This target has become more difficult, but it remains possible with strong execution. And as Elon mentioned, no more force majeure events for the balance of the year.
A lot of force majeure in the last several years. That's for sure.
Thank you.
Thank you very much. And now let's go to the questions from investors. And the first question is, Chinese EV manufacturers seem to be doing a better job than their Western competitors, excluding Tesla, at innovating in software and design. How can Tesla make sure the company is staying ahead of those manufacturers, both within China and outside of China?
Well, right now the best Chinese EV manufacturer is Tesla China. We're actually doing the best thanks to our incredible team in China. But I have a lot of respect for the Chinese car manufacturers and EV manufacturers in particular. I think they will be a force to be reckoned with worldwide. They're smart and they're hardworking, and I think anyone who is not, any company that's not as competitive as them will obviously suffer a market share decline. So I would say we have a lot of respect for the car companies in China and then their capabilities. Yeah.
Thank you. The next question is, when will Tesla have a unified vector space for both static and moving object network? Will this be a V11 or later version? If the latter, can you explain what makes it a difficult problem in layman terms?
Okay. This answer will be understood by 0.001% of the
Here we
audience,
go.
I think. Most people don't know what a unified vector space would actually mean. It essentially would be if you can take, if instead of knitting together static and dynamic objects in C++, if they can be knit together at the neural net level, then you don't need to reconcile them within C++ heuristics. That is an architecturally better way to that's the most desirable outcome. I think it's probably not necessary to achieve full self-driving, but it would be a slight improvement in the efficiency of the self-driving, and it's certainly something we want to get to. The sort of nirvana situation is you have surround video auto labeling of all static and dynamic objects, and you have then surround video inference with spatial memory as well. And that's, I mean, I think we're almost certainly there before the end of the year. Yeah, not sure how many people would understand that, but
sounds good.
Good progress.
I should say also we are also confident of improving the frame rate as we delete some of the legacy neural nets. We think we might be able to get to the frame rate of all 8 cameras, maybe up to 36 FPS, which is actually a lot of frames considering it's 8 cameras, but certainly comfortably above 24 frames, which is basically the movie frame rate of movies.
Thank you. The next question is, Elon recently tweeted about lowering prices once inflation cools down. Can you elaborate on what do you mean by cooling down and how aggressively the company will lower prices? More broadly, how do you think about the auto pricing long term?
Interesting question.
Yeah, so since we have there's a quite a long wait when somebody orders a car. In some cases, it's like six months. In some cases, it could be up to a year. We have to anticipate what the probable inflation rate is over that period of time. So that's what we're trying to do. When we see, when or if we see indications that the inflation rate is declining, then we would not need to increase our car prices. It's possible that there could be a slight decrease in car prices, but this is fundamentally dependent on macroeconomic inflation. It's not something we control. If I were to guess, and I wouldn't take this with a grain of salt, I think inflation will decline towards the end of this year. We're certainly seeing prices of commodities trending lower. But take it with a grain of salt. This is making economic prognostication is fraught with error. I don't know if you guys want to.
Can somebody else take over?
Say anything about?
Yeah, we're certainly saying, it's kind of a whole spectrum. On the battery metal side, for example, the price of lithium has really shot up. We used to be $11 a kilogram to more than $80 a kilogram. But, it's not every situation is that bad. So it's kind of a spectrum.
Like carbon steel, aluminum, carbon steel and aluminum has started trending down. We will see the benefits of it only probably later part of this year or early next year.
Yeah, but I think that's just like for most commodities, we're seeing a downward trend towards the end of this year or next year. Some commodities, the processing of lithium is insane. I'd like to once again urge entrepreneurs to enter the lithium refining business. The mining is relatively easy. The refining is much harder. So the lithium is actually a very common. There's like lithium pretty much everywhere, but you have to refine the lithium into battery grade lithium carbonate and lithium hydroxide, which has the extremely high purity. So it is basically like minting money right now. There's like software margins in lithium processing right now. So I would really like to encourage once again entrepreneurs to enter the lithium refining business. You can't lose. It's licensed to print money.
Thank you. The next question is, you made the right economic call before most on inflation when you diversified into Bitcoin. It has since shown it's not much of a hedge in the real world test in the last few months. How do you think about it as an asset over long term, and what do you need to see to change your view?
Well, Tesla's goal is to accelerate the advent of sustainable energy. We're not really cryptocurrency is a sideshow to the sideshow. So we're not cryptocurrency is not something we think about a lot. We think a lot about scaling production and accelerating the advent of sustainable energy, which the record heat waves around Earth serve to emphasize the urgency of that transition. So that is what we're trying to do, is make electric vehicles and solar and stationary storage battery packs, the three pillars of a sustainable energy future, which is like solar and wind for energy generation, stationary battery packs for storage of the solar and wind energy because of its intermittency, and then electric vehicles, the third pillar. And if those three things are solved, we have a sustainable future for civilization. And the fundamental good of Tesla, and the reason we're doing this, or certainly my primary motivation here, is to have the day of sustainable energy come sooner. That's our goal. We're neither here nor there on cryptocurrency.
Elon has grown up a lot in the last
next
couple of
question
weeks.
on 4680. Elon noted that 4680 plus structural pack is not yet optimized. Can you please share the general path of 4680 and structural packs in terms of cost efficiencies and compared to the traditional 2170 pack? Will cost improvements be mostly due to scale, or do we need to solve some technical issues?
should I start off or George?
Yeah, do you want to do the architecture?
Yeah. So structural pack, where we get dual use of the battery or the cells as structure and as energy storage, in the same way that an aircraft gets dual use of the wing as a fuel tank and as a wing, is, I think, unequivocally, from a physics standpoint, the superior architecture. So it's the A architecture. Now, because it is new, we'll start off getting, I don't know, aspirationally a C within an A architecture. But the potential is there to get radically better and then unequivocally better than a battery pack, which is carried like a sack of potatoes. So
yeah, and we've gained the perspective through putting our first structural pack in production that it is actually the A architecture.
Yeah.
Like before we did that, it was a hypothesis that was backed with got a lot of modeling and first principles analysis, but now we've actually built it and are more confident in that assertion.
Yeah, so exactly. So the structural pack, even the C and the A architecture is beating the non-structural pack. And so over time, it will, with further refinement, be substantially superior to a car that is carrying a battery pack as though it is cargo. And this, like I said, it's very, very much very analogous to the early days of aviation, where fuel tanks were initially carried like cargo until they realized actually you should get dual use of the fuel tank as a wing and as a fuel tank, and that makes the planes lighter and better. And the same is true of electric vehicles.
And on cost improvements, are they due to scale or about solving technical issues?
Both.
Yeah, it's always both.
Yeah, I mean, but really, the two things that improve cost are economies of scale and tech and core technology. So,
Yeah, I think technical issues are not the right.
it's not technical issues, like
It's like
technology
getting to
advancement.
the optimal design, right? Like you always start with some excess. Some people might call it fat, but that's not really what you think it is initially. It's that you don't know how lean you can get it until you've done it a couple times.
Yeah, I mean, there's some platonic ideal of the perfect product where the atoms, you have exactly the right atoms in there in exactly the right position, and you asymptotically approach this platonic ideal. And but it takes a lot of effort over time to figure out actually what is the platonic ideal, and then to actually gradually approach that.
Yeah, I mean, you might need to create a new alloy, then you need to figure out how to cast it, then you need to ramp the casting machine of the new alloy. As an example,
We did.
We've done it for rotors, we've done it for the casting. So, like, yeah, but those take time.
Constant improvement is something we're used to here, and it's something like we've done with our vehicles and our design since the beginning. I mean, even we were talking a couple of weeks ago, like the first version of the front casting that we made that went into the early vehicles is like
Model S days.
no, I'm talking about like our first Model Ys.
Oh yeah.
Since we've ordered more dies because we need more dies for more production, we've saved like 4 or 5 kilos of mass just in die iteration, and that's something we do at Tesla like quite regularly, and we'll continue to do. So like we're not happy with a C, like maybe we're at a C plus now because but like we got to keep going to get to
A B minus ish on the rear casting, but this will transfer for improvement with the casting. So the casting is already way better than the rear body casting is already way better than the way it was done in the past, where you've got 120 different parts that are welded together or bonded together with different alloys, and then you have to put sealant in between all the various parts for water ingress and noise. So we're already way better than that with current casting, but there's still a lot of opportunities to reduce the mass of the casting and also extend the casting to include more parts, as well as adapt the rest of the vehicle for the fact that there's a casting.
Yeah, I was going to say the same thing, right? Like we're not just evaluating the pack in isolation either.
Yeah.
It's the pack plus the body, the integration. Do we have mass in the right places? Do we have the cost in the right places, and only just the right amount? And I think we've gone through one iteration we're doing another one with Cybertruck. I mean, we're taking the learnings and doing, the next version hopefully is a B plus.
Yeah. Yeah, exactly.
In the A architecture. That's certainly the target.
Thank you. The next question is, how do you feel the progress of FSD is going, and does Andrei Karpathy's leaving have any significant impact on timelines or potential progress?
Well, since Andrei was writing all the code by himself, naturally things have come to a grinding halt. Insert irony. Andrei's obviously Andrei's awesome, and we have tremendous amount of respect for Andrei. He's decided to. I think he wants to contribute more to, I think, core AI at an academic level, and get back to coding individually. So, but we've got a team of about 120 people in our software AI group that are extremely talented, and I think we will have. I'm highly confident we will solve full self-driving, and it still seems to be this year. I know people, they're like, always says that, but it does seem to be like it does seem as though we're converging on solving full self-driving this year.
Thank you. The next question is, how is the 4680 ramp going, and is Giga Texas producing cells yet?
Yeah, so we are making progress on 4680, but right now, as Elon mentioned, we are leveraging supplier cells, which we have in sufficient quantity to ramp Texas and Berlin. We expect to ramp total 4680 production to exceed 1K per week by the end of the year, hopefully before, well before. In Q2 at Cato, we fully automated powder conveyance for the dry anode electrode tool there, unlocking major increases in production and improvements in yields. Since March, because of that, Cato output has grown 35% month over month each month since, and yields throughout the factory are already at targets in most areas and trending in that direction in a few others. We did feed learnings from Fremont cell and pack lines to Texas and Berlin. They aren't a carbon copy. Cell design was revved to unlock higher performance and manufacturing simplicity. Manufacturing lines were further integrated, and we insourced additional content. For these reasons, there are some new ramp challenges to overcome in Texas and Berlin. Specific to Texas last quarter, cell equipment was fully installed and commissioned, and we produced our first commissioning car sets of cells through the end of the line. Our target for Texas is to begin production this quarter and aim for Texas to be capable of exceeding Cato weekly output before the end of this year.
Thank you very much. The next question is on 4680 as well, but I think Drew has covered everything that was in the next question. So the following question is, with regards to the ramp of production in Austin and Berlin, how is the situation with regards to supply of semiconductors, battery cells, and other components? How about cost inflation impacting profitability of these other plants?
Smart. I can take that. So Tesla procures about 1,600 unique pieces of silicon from 43 semiconductor companies. So with a portfolio of that size, there are always challenges. Things are more stable on the latest generation chips. We still see some tightness in the older generation semiconductors, especially in the analog and mixed signal space. But we have line of sight to solve for the volumes being contemplated for both Austin and Berlin. And on the cell front, like Elon mentioned, we have a comfortable margin thanks to record output from our partners and have line of sight that matches the planned output from both factories. We've grown cell production significantly on a 12-month rolling basis and have long-term contracts with all our partners for key battery metals. So we don't see any major problems for the components, of course, barring unforeseen COVID-related shutdowns.
Just to add on the profitability part of the question, Q2 was our largest increase yet over the last handful of quarters on inflation and commodity-related increases to our cars. It's fairly evenly spread across the factories, given common suppliers or common issues that impact the broad supply chain. So I think I had mentioned before that we had been seeing increases over the course of last year. It ticked up in Q1, and then it ticked up again the rate of increase was more in Q2. So, as we look through to the end of the year, what we're seeing is we don't think the inflation-related increases in Q3 will be as big as Q2. But as Elon had mentioned, there's uncertainty on pricing here. And we don't have full exposure, as Karan had just mentioned, on every component of cost, because we do have some contracts in place, but there are some spot buys as well, and some contracts being renegotiated. So, we're managing it with pricing and in partnership with our suppliers, but it does continue to be something that is impacting our financials.
Thank you very much. And the last question is, when will the Cybertruck be officially available?
We're hoping to start delivering them in the middle of next year.
Great, thank you very much. And now let's go
Very
to
direct
analyst
answer.
questions. The first question comes from Pierre Ferragu from New Street Research. Pierre, feel free to unmute yourself.
Hi guys, thanks a lot for taking my question. I'd like to ask a question on 4680 and the structural battery pack. And I'd love to understand where you stand on the technology and efficiency and energy density roadmap that you described at the battery day. So what I'm trying to understand is, where do you stand on the architecture of the battery cell itself? How much silicon do you have in it? How much energy improvement have you achieved already so far? The reason I'm sorry?
No, go ahead.
And the reason why I'm asking that is because you have very smart guys on Twitter who shared experience about trying to fully empty a Model Y from Texas, from Austin, and noticing behaviors and recharging behaviors that suggested that maybe these cars had very, very high mileage, very high range, and were artificially limited in range in software. So I'm just kind of trying to understand how much of an edge you're building at the moment with the 4680 and the structural battery pack on range.
Yeah, let me try to provide a super straightforward answer. As Elon mentioned before, our priority was really on simplicity and scale during the initial 4680 and structural battery ramp. So we weren't putting all the bells and whistles in from day one, because if so, we would be sort of suffering under a string of series miracles that we would need to achieve to get going. But as we attain the manufacturing goals that we've stated, hit the ramp that we need to hit next year, we are certainly planning to layer in new material technologies and higher range structural packs. We're not holding back goodies for some rainy day or something like that.
Yeah, maybe another way of putting it is that our focus right now is on basically dozens of little issues that inhibit the production ramp of the 4680. Some of the more challenging ones have been feeding the anode and cathode material, because we were using this revolutionary dry electrode process. But when something's revolutionary, it's a lot of unknowns that have to be resolved. So we're confident of resolving those unknowns, but it's very, very difficult. We're making rapid progress on that front. So the first order of business is really get the basics right, get to high volume and high reliability, and then very rapidly iterate within that to enhance the energy density and reduce the cost of the cell. Yeah, totally agree. Yeah.
Okay, thanks.
I'd say we are highly confident of a good outcome. It's the exact counterpoint to that is perhaps it is of some debate, but the outcome is not.
Yeah, and specific to the dry process, we made a major advance this past quarter in Cato that the team is really excited about, and congrats to the team for achieving that.
But I should also emphasize that it is not as though Tesla intends to displace our suppliers of battery cells. The Tesla battery cell production is in addition to what our suppliers can do, and we want our suppliers to grow their battery output as fast as they possibly can, and that goes for the entire supply chain. The fundamental rate limiter for Earth transitioning to sustainable energy is how fast can you grow lithium-ion battery output per year. This is the fundamental rate limiter for Earth transitioning to sustainability, because you need the batteries for two of the pillars of sustainability: the stationary storage and for vehicles.
Yeah, and I just want to stress that a lot of these, higher energy density technologies are not necessarily scalable. I mean, most of them are not scalable from what I've seen. And so like focusing on them is a distraction from the mission. Like it really is, how do we scale as fast as possible? And, we're taking these risks that we've discussed at Battery Day, and our plan is as we de-risk them and they are successful, we want to bring them back to our partners so that they can go faster too, because that's all on the mission, right? Like, how do we accelerate?
People often ask me if is some breakthrough needed in battery technology for the world to transition to sustainability. The answer is no. Even if there was zero technology breakthroughs, literally zero, from where the technology is right now, we could fully transition Earth to sustainable energy. The issue is very much the rate at which the entire supply chain, from mining to refining to cell production, how fast can that grow? It's growing fast, but the faster it grows, the faster we transition to a sustainable energy economy.
This is actually a great, exactly where my follow-up is. So, Elon, you always mention, this 50% per annum sustainable growth target that you guys have, and so my question here is, when we see like the difficulty regarding like commodities, raw materials, swinging prices, I'm kind of wondering, as you are planning for this 50% per annum growth, if we stand today over the next 5 to 10 years, how much of that do you feel you've secured through your work at entering into long-term contracts and things like that? And you were calling for entrepreneurs to go into the lithium business. And so does that mean you don't have enough lithium secured to grow 50% per annum over multiple years? And what's how much of that is secured today, and how fast can you improve that, basically?
Well, I think it's very difficult to predict anything 10 years from now. I hope civilization is still around, frankly. I would count that as a win.
It's not that funny.
Yeah, exactly.
Every day.
Hopefully we haven't had World War III by then.
Or the Earth isn't burned up.
Yeah. We do see constraints in refining of the materials necessary for lithium-ion batteries. I do want to emphasize it is not due to a scarcity of the raw material. In the case of lithium is one of the most common elements on Earth. It's pretty much everywhere. But refining of the lithium into ultra-high purity battery-grade lithium hydroxide and lithium carbonate is quite difficult and requires a massive amount of machinery, and it's a hard thing to scale. It is also difficult to create the anode and cathode. I think my guess is maybe 2/3 of batteries will be iron phosphate, or maybe iron phosphate with some manganese. And there's a ridiculous amount of iron on Earth. In fact, Earth is a little bit of trivia. Somebody says, what is Earth made of more than anything else? Iron. Iron is the number one ingredient of Earth by mass. Number two is oxygen.
Yeah.
Which is wild, but yeah. Oxygen's basically rust. You stuck them together. We're a rust wall. That's almost 2/3 of Earth, I think, is rust.
Mining the mantle might be a bit
we
difficult.
are like a rusty ball bearing with a little bit of other stuff. But plenty of lithium. So anyway, there's not like a shortage of materials.
Yeah, I mean, another thing on that LFP thing is it isn't just that there's more access to material that way. The actual refining process is less capital intensive to make a good LFP cathode. And so it's not just scalable on the resource side, it's scalable on the refining side.
Absolutely. To be clear, there's no fundamental barrier here. It's simply a rate question. Like at what rate can you scale production?
Yeah.
And I think we're seeing a very rapid increase in battery production, and in the whole supply chain. If you were to say today, what are concerns? A few years down the road, I would say one of the concerns is the machinery to refine the critical ingredients of lithium-ion cells. So the lithium itself, and then the cathode, which like I said, we mostly iron phosphate, perhaps with some manganese. Like I think almost all stationary storage will be iron phosphate, and then you'd really just need nickel chemistry for long-range vehicles and like aircraft and that kind of thing.
Yeah. The other thing I would say is, we're working with our suppliers to ramp their capability as quickly as possible. And it's not like we have a problem in the next year or two, to specifically to your question. But when we look 10 years out, we need to do more to accelerate the growth. And that is why we are making our own investments. Like we are building a cathode facility here in Texas. The steel is going up. You can see it in the flyovers. We're working on lithium refining activity as well ourselves, because, the best way to learn how to accelerate something is to do it yourself. So these are the things we're doing to move it all forward.
Yeah, I mean, if our suppliers don't solve these problems, then we will.
Yeah.
Thank you. The next question comes from Emmanuel Rosner from Deutsche Bank. Emmanuel, go ahead and unmute yourself.
Yeah, thank you so much. I have a question on your vehicle demand and then a quick follow-up on supply. First, on the demand side, are you seeing any sort of pressure in the order book or the pace of new order, or any sort of like slowdown as a result of the pressures that the consumer is experiencing? Are you worried about it in light of your view of the risk to the economy that I think you expressed, Elon?
Well, right now our problem is very much production. So we have long leads on, as anyone can tell if they order our car. If you order a Model Y, it will arrive sometime next year. So this is clearly not an issue for many months for us. Our problem is overwhelmingly that of production. So, yeah.
Okay.
Maybe just two things to add. Specifically on your question, are we seeing a macroeconomic impact on our demand? Not that I can tell. Maybe a little, but
some maybe, but it's
not material. The second thing, to Elon's point about backlogs, we have a very long runway with very long lead times here. I mean, certainly the world is uncertain, and we'll have to see where things go with commodity prices, how quickly we're ramping production, what the state of the world looks like at some point next year. But the demand is not something we spend really any time talking about.
Yeah, and I think it's maybe just once again worth mentioning that there is a difference between value for money and fundamental affordability. Because sometimes people say, well, if you got all this demand, why don't you just raise the price to some, double the price or something? And this is usually expressed by somebody who's rich. So there's, even if you rail value for money to infinity, if consumers do not have enough money to buy it, even a product where the desirability is railed to infinity, they simply cannot buy it. So this is why you cannot just raise prices to some arbitrarily high level. Because you pass the affordability boundary and then the demand falls off a cliff. So I do feel like we've raised our prices, or we've raised our prices quite a few times. They're frankly at embarrassing levels. But we've also had a lot of supply chain and production shocks, and we've got crazy inflation. So, I'm hopeful. This is not a promise or anything, but I'm hopeful that at some point we can reduce the prices a little bit.
Thank you.
Okay,
Emmanuel, do you have
I'm on the
my
asked him. He
follow-up
said
was
maybe
actually
not.
on the supply side. So it was very encouraging to see that you're quantifying your current installed capacity at basically already in excess of 1.9 million units installed currently. How quickly do you think that you can fill that capacity?
Very useful question. We talked about it when we were looking through the slides.
Well, I mean, I think we've got a good chance of exiting this year at 40,000 vehicles a week.
Yeah, I mean, our internal plans are to have the capacity utilized by the end of the year. It takes time to ramp there. It'll be a challenge. There's a lot that needs to happen to get there, but that's what we're working on.
Yeah, we've had many 30,000 car weeks already, so I think a 40,000 car week is within reach by the end of this year.
Shanghai and Fremont, as we said last month, were record production, and they're really firing. It's a bad term. Doing really well.
Yeah.
But then Austin and Berlin are coming on strong. Theoretically, they also had record quarters last quarter. And if we ramp them to the capacity shown in the deck, by the end of this year, we'll be at that rate.
Yeah. But there's always a lot of uncertainty, and like in the production ramp looks like an S curve. And that intermediate part of the S curve it's very difficult to predict that with high certainty. But the end part of the S curve, you can say, I think you can have a lot more certainty, and so that's why I'm confident we'll get to 5,000 cars a week at in Austin and Berlin. By the end of this year or early next year, and probably, but not certainly, 10,000 cars a week at both locations by the end of next year.
Thank you. The next question comes from Colin Rush from Oppenheimer.
Let's
Colin,
see.
go ahead, please.
Thanks so much, guys. Could you talk a little bit about the pricing strategy around FSD and as you get closer to this full functionality rolling out and the increased cycle times, how you see that evolving through the balance of this year and into 2023?
Yeah, we will. We will increase the price of FSD sometime later this year. I think, probably just before we go to wide beta. Where wide beta is, anyone who wants to use the beta software with all the caveats associated with that can use it. Then it would make sense to increase the price of FSD. The value of FSD is, I think, extremely high and not well understood by most people. It is basically currently ridiculously cheap, assuming FSD materializes, which it will.
Great. And then sorry to belabor a little bit on this battery material side, but in terms of some of the suppliers and the contaminants, can you be a little bit more specific around some of the elements that you guys see in some of your supply chain that can prove troublesome on yields for the 4680s, particularly around lithium and potential contaminants in either the hydroxide or the carbonates that you guys end up seeing real issues with as you move into production?
Yeah, don't really think we have anything to comment on. Yeah, the purity specs of lithium on this call right now. Yeah.
Contaminants for the 46.8 are not a factor. This is not an issue.
Okay, thank you very much. The next question comes from Tony Sakanagi from Bernstein. Tony, go ahead, please.
Yes, thank you for taking my question. I have two as well. In response to the question around demand, I think, Zach, you said maybe a little, and Elon, you said maybe some indication that you might see some pressure on demand. And I'm wondering if that is really just speculation or whether there's any empirical data that you saw in the last month, whether it be cancellations or order lead times, that led you to make that comment. I think anecdotally, if you squint, the lead times have gotten a little lower over the last 4 months in both China and the US. That's really the only visibility investors have. So I'm wondering if you could maybe elaborate on whether that's really just your, sort of anticipating there could be some impact because of high prices, or whether there is something anecdotally or quantitatively that you could point to, please.
I think we've said this now for many years, and it is proven true. Tesla does not have a demand problem. We have a production problem. And we've pretty much almost always had it with, very rare exception, it's always been a production problem. I think that will remain the case.
Also, there's a denominator and a numerator, and
If you increase production.
yeah.
Yeah, absolutely. As we increase production, more demand is needed, obviously.
Well, it's more just you can't look at the backlog and state much about demand, because we're doing a lot on the other side to change the production. But
we're trying to make the backlog lower, not longer.
Building factories and building more cars.
We don't want a long backlog. That's annoying. It'd be like go to a restaurant and you order a burger and you have to wait 3 hours. I'm like, that's annoying. You want to get your burger right away. Same with the car. So we want the lead times to reduce.
Okay, thank you. Now, I was just trying to follow up on the fact that you both said that maybe you were seeing demand be impacted a little bit, and that was the spirit of the question. Maybe I can
say we don't have because we see daily orders from around the world for our cars. It is like a mood barometer of people's confidence in the economy. But one can't read too much into it because things can vary a great deal from one day to the next. Consumer sentiment is all over the map. So it's manic. I was manic depressive, frankly. But we have so much excess demand that it's really just not an issue for us. It might be an issue for some other companies, but it is not an issue for us.
Okay, thank you. Elon, I'm just wondering a question for you. Tesla's obviously changed dramatically in the last 3 years from, near life or death to a company with, consistent cash flow and industry-leading margins. I'm wondering if you can comment on your personal role in the company and whether you see that changing in terms of your role or your commitment and time spent at the company over the next 3 or 4 years. I think you said a few calls ago you wouldn't be on calls and unless there's something unusual, and you've been on every call since then. I'm wondering how
there's been a lot of unusual things. Let's face it.
A Twitter question without mentioning Twitter.
Basically, if there's only good news, I won't be on the call. but if you have a tough situation like COVID shutdowns in China, then I think I'll be on the call. If relatively speaking, there's bad news, and if all we have is good news, then I won't be on the call. But I'm committed to the long term. I mean, I'll work at Tesla as long as I can usefully advance the cause of sustainability and autonomy.
Fantastic. Thank you very much. The next question comes from William Stein. Please go ahead and unmute yourself.
Great. Thank you very much for taking my question. Elon, in the past, you've given some assessment as to the likelihood that you can achieve success in some of the more interesting AI-oriented efforts, not only FSD, but also Dojo and Optimus. Perhaps you can give an updated view on those.
Well, I don't want to steal thunder from AI Day. So I think we'll have some exciting news on AI Day that I think will be further ahead than probably most people think. But I don't want to. I'd love to answer you, but I think we'll leave that excitement for AI Day.
Come
Okay,
on.
and, perhaps a follow-up, if I can. We've heard a lot from others, and certainly to some degree from you all, about the shortages in semiconductors in particular. We have seen some, big important customers of that type of product decide to sort of, leverage the ecosystems that exist to make some of their own in those categories. I'm wondering to what degree you're doing that. It's outside of Dojo in terms of the, I guess on the inference side, you're certainly doing that in the car. But what about sort of the more mundane areas like microcontrollers and the like? Is there any internal effort to improve supply chain and maybe improve other performance aspects?
Well, there's a lot we've done. We've been working with our suppliers a lot. We don't currently intend to make chips ourselves. We don't think there will be a need to make chips, but we have been working closely with a number of suppliers. I actually just met with one of our key supplier CEOs right before this call. We had a great meeting. They're going to make major investments in some of the critical chips and components that we need in the car.
Spill the beans.
And I've actually like take a moment to thank our key suppliers once again for supporting us through difficult times, and they really went above and beyond to support us. So to all our suppliers out there, thanks very much.
Who's that? AMD? What do we reckon?
Yeah, and I guess just maybe we don't talk about it very often, but we do have a lot of custom silicon in the vehicle already. Microcontrollers, yes, some. Battery management, yes, some. Power electronics, yes, some. So we try to go after where there's actually a technical advantage. And in the future, I think we're going to look at where there's a supplier advantage as well, even supply chain advantage.
Even now, where there's supply chain issues with our tier ones and tier twos, Karn and Roshan get into it with us on the engineering side, and we find solutions, whether it's alternative chips or, changing the entire structure of the stack to make it work. And I think that's an advantage we have that many other OEs just simply cannot.
Yeah, I think Tesla is as much a software company as it is a hardware company, and so one of the ways that we've been able to address supply chain issues on the chip front is by rewriting our software to be able to use different chips, or in some cases achieve dual use of a single chip, which is even better. And actually, quite frankly, the chip shortage served as a forcing function for us to reduce the number of chips in the car.
Simplify.
Yeah, it turns out we had more chips than we needed. So, but it's a testament to our software team that we're able to roll a new chip into the car and write a whole new batch of software for that chip, and without interrupting production.
Yeah, and our goal is, as we mature and scale the platforms, to integrate more functionality into fewer chips. Like that is the way that it's gone with laptops and phones. It's going that way in cars, and we're trying to do that wherever it makes sense to do it.
Yeah,
as quickly as we can.
I mean, from a supply chain standpoint, what do you think about chips and whatnot?
Yeah, I mean, from a high level, instead of designing and building our own microcontrollers, we're partnering with key partners that understand the architectural requirements, and they'll take the specs and design something for us. We've done that, to your point, Drew, in the battery sensing space. We've got some application-specific ICs. But yeah, integrating, reducing the number of components, it makes the supply chain easier, but it also makes the reliability of the end product better. because there's less failure points. So that's always been the mantra.
At times we also go at the wafer level and try to consume less to achieve the same functionality. So that's something also that we've been looking at in some of the constrained modules that we've faced in the last 6 months.
That's good. Fantastic. Well, thank you very much. I appreciate all of your questions. Unfortunately, this is all the time we have this quarter, and we will speak to you again in 3 months' time. Thank you very much and goodbye.
And that is it. That's it. Well, thank you very much for everyone who joined. It's quite interesting because almost all of the discussion on the call was about lithium, about chips, about batteries, and perhaps not all of it necessarily massively commercially relevant for the near term. Very useful to know and understand more as an investor for the longer term. There was relatively little about given out about what the pace of development is, although we did get another Elon timeframe of the Cybertruck is going to be manufactured in the middle of next year. We're going to be seeing substantial volumes of 4680 cells produced by the end of next year. And there was a reference earlier on where he said, hey, towards the end of this, there's two separate things where he said by the end of this year there was going to be substantial progress with FSD, and in a separate comment he said that there's going to be substantial progress with 4680 cells, without really specifically saying exactly what it was. I don't think Elon really walked into too much while doing all of this, and the share price hasn't moved at all. It's up 0.8%. Elon actually made a few comments during the call which I thought sounded extremely grown up for what he used to say about things, about, saying that Bitcoin is a sideshow to a sideshow, and that they don't want to long-term be playing in that space, but they'll probably hold more in the future if there is relevant business use for holding it, etc., etc. And I can't remember what the other one was. He made a few comments that sounded a little bit more like, I don't know, an earnings call of one of the biggest companies in the world. So that's all good news. It's all good news. We'll see what the stock market thinks about it tomorrow when the doors open. Aftermarket and pre-market are these days very unrepresentative of what actually happens. But really interesting earnings call. Really looking forward to Q3 numbers now, which should put us back on some kind of actually useful and viable track. Thank you to everyone who joined. I really appreciate it. If you want to sign up through Patreon or to become a channel member and continue the conversation in the Discord, please feel free to do so, and I'll see you in there. But otherwise, have a good evening, good night, good morning, wherever it is that you are, and I will see you guys later.